Okay. Your Excellencies, our special guests, speakers, panelists, ladies and gentlemen, on behalf of the senior management at National Bank of Abu Dhabi and all of my colleagues, I'd like to extend a very warm welcome to all of you to this, the 2013 Global Financial Markets Forum. Let me tell you, it's fantastic to stand up here and see so many of you here. Thank you for attending. I see many familiar faces. For those of you that I haven't had the privilege of meeting, my name is Shivan Bogaita. I work with the financial markets team at MBAD, and I'll be your host for the 2 days of the conference. As you can see, we have a really packed agenda over these 2 days. Some amazing speakers, some very prolific and very generous speakers in terms of the time that they've given us. So please, one thing that I would ask from a housekeeping perspective is please help us to keep things on time so that we can give the speakers their allotted space and really get the most out of this conference. Second, in terms of housekeeping, every one of you should now have a translation headset. If you do, please do select the appropriate channel in terms of the language that you prefer. We do have 2 speakers who will be speaking in different languages, and we need to use these headsets for those purposes. I don't know about you, but with all these mics and earpieces, I feel like I'm Secret Service at the Oscars. So we will get things started ASAP. I just want to make sure everybody is seated. We can really get the maximum out of this event. Okay, so to get everything started and for our formal welcome address, I'd like to welcome on stage His Excellency Nasser Al-Suwaidi, Chairman, National Bank of Abu Dhabi. Sir.
بسم الله الرحمن الرحيم. السلام عليكم ورحمة الله وبركاته. معالي الشيخ نهيان بن مبارك آل نهيان، معالي سلطان بن ناصر السويدي، فخامة نيكولاي ساركوزي، معالي جيمس بيكر، معالي ديفيد ميليباند، الحضور الكريم، يطيب لي أن أرحب بكم في ملتقى أسواق المال العالمية. في عامه الخامس يواصل الملتقى توفير وسيلة فعالة وديناميكية للحوار وتحليل ونقاش أهم القضايا في القطاع المالي في الوقت الراهن، ونسعى لتحقيق هذا الهدف عبر استضافة المستثمرين وصناع القرار والمفكرين للحوار والنقاش ومشاركة رؤاهم حول الاقتصاد العالمي والأوضاع المالية. لقد شهدنا التحولات الجذرية في التوجهات الاستثمارية منذ الأزمة المالية التي عرضت العديد من الدول لمخاطر أساسية والتي أثرت علينا جميعا. في الوقت نفسه فإن التقلبات في أسواق المال وفرت الكثير من الفرص الجيدة والتي استفاد منها عدد من المستثمرين في خلال السنوات الخمس الماضية. أما في الوقت الحالي فإن التحدي يتمثل في رصد الاتجاهات الجديدة خلال السنوات المقبلة وكيفية الاستفادة منها. نظراً لموقع دولة الإمارات العربية المتحدة الاستراتيجي بين الشرق الذي يضم أبرز محركات النمو العالمي والغرب الذي يوفر فرص استثمارية مغرية، فإن أبو ظبي تعتبر العاصمة مكاناً مثالياً لاحتضان وتنظيم مثل هذه الملتقيات العالمية لنقاش أبرز القضايا الراهنة في أسواق المال. كذلك فإن أبو ظبي من أبرز الفاعلين في أسواق المال العالمية، وقد نجحت في وضع الأسس للعديد من اتجاهات الاستثمار في السنوات الماضية، وما زالت تقوم بدورها المتميز برؤية حكيمة في مجال الاستثمار. خلال يومي ملتقى أسواق المال العالمية سيقوم المتحدثون والمشاركون باستعراض ومناقشة الآثار المحتملة للتحديات التي تواجهها الاقتصادات الأوروبية والأمريكية والتغيرات الأخيرة في السياسات الحكومية وتأثيرها على اقتصاديات منطقة اليورو واتجاهات النمو والاستثمارات في أسواق رأس المال وآفاق الانتعاش في الولايات المتحدة الأمريكية. ونأمل أن يوفر الملتقى فرصة مناسبة للقاء والنقاش مع نظرائكم وبناء وتعزيز جسور التعاون مع المستثمرين المحليين والإقليميين. ويسرني أن يكون في مقدمة المتحدثين شخصية تلتزم بتأهيل أجيال المستقبل لمزيد من المسؤوليات التي ستلقى على عاتقهم. السيدات والسادة، يسرني تقديم الشخصية التي كرست حياتها المهنية للخدمة العامة وأصبح سفيراً للتعليم، ليس في دولة الإمارات أو في المنطقة بل في جميع أنحاء العالم. في افتتاح ملتقى أسواق المال نرحب بمعالي الشيخ نهيان بن مبارك آل نهيان وزير التعليم العالي والبحث العلمي، فليتفضل.
بسم الله الرحمن الرحيم. الحمد لله والصلاة والسلام على أشرف المرسلين، فخامة الرئيس نيكولاي ساركوزي، معالي جيمس بيكر، أصحاب المعالي والسعادة، الضيوف الكرام المشاركون في الملتقى، أيها الأخوة والأخوات، السلام عليكم ورحمة الله وبركاته. يسرني كثيراً أن أرحب بكم جميعاً في هذا الملتقى الاقتصادي الهام وفي مدينة أبو ظبي التي تمثل اليوم بالإنجازات والإسهامات التي تحققها في كل الميادين نموذجاً رائداً لحيوية الشعوب ومثالاً مرموغاً على دور القيادة الحكيمة والواعية في تحقيق التقدم والرخاء في ربوع المجتمع في هذا العصر الذي أصبحت فيه ثروة الأمم تقاس بمدى قدرتها على الإبداع والابتكار، بل وقدرتها أيضاً على تحويل الأفكار والمعارف إلى منتجات واستثمارات. يشرفني في البداية أن أعبر باسمكم جميعاً عن عظيم الشكر والتقدير إلى صاحب السمو الفريق أول الأخ الشيخ محمد بن زايد آل نهيان ولي عهد أبو ظبي ونائب القائد الأعلى للقوات المسلحة. نعتز كثيراً بدعم سموه لهذا الملتقى ومساندته لأهدافه، بل ونسجل أيضاً شكرنا وتقديرنا لجهود سموه المباركة التي تسهم في تشكيل وإثراء المسيرة الاقتصادية في الدولة والعالم، وتستحق منا جميعاً كل الامتنان وكل العرفان وكل التقدير. إنني أيها الأخوة والأخوات أرحب بكم جميعاً في هذا الملتقى، فإنما أود أن أؤكد على عدد من النقاط التي أرى أنها بلورة أمينة لجهود كافة القائمين عليه والمشاركين فيه بل والمهتمين به. النقطة الأولى: إننا نأمل أن يكون هذا الملتقى بإذن الله جسراً قوياً تمتد عليها العلاقات الاقتصادية الناجحة بين الدول، بل ومناسبة مواتية تجسد مكانة دولة الإمارات العربية المتحدة ومكانة العاصمة أبو ظبي باعتبارها مراكز مرموقة للاقتصاد العالمي تحظى بنمو اقتصادي قوي وتقوم بدور مهم في مجالات الاستثمار والتجارة في العالم، بل وتحرص كل الحرص على دعم التنسيق والتعاون مع كافة الدول والشعوب، مستندة في ذلك على أرض صلبة من إنجازات وقوة الإرادة. النقطة الثانية أننا نعبر في هذا الملتقى عن اعتزازنا وفخرنا ببلدنا الإمارات وما حققته وتحققه من نهضة شاملة وتقدم اقتصادي ملحوظ. لدينا ولله الحمد اقتصاد متنام ومفتوح يتيح الفرص أمام الجميع للإسهام والمشاركة، اقتصاد يشجع على التنافس الإيجابي والنمو الرشيد، وينطلق في الوقت ذاته من اعتبارات الحفاظ على القيم الأصيلة للمجتمع، اقتصاد قادر على الأداء الجيد في عصر العولمة، يحفز على الإبداع والابتكار، كما يتسم بالشفافية والانفتاح على السوق العالمية. اقتصاد يعمل على توفير فرص العمل المنتج لكافة المواطنين والسير قدما إلى الأمام نحو قيام صناعات وطنية وتنمية مصادر الدخل القومي. إننا في الإمارات حريصون كل الحرص على توفير بنية أساسية وبيئة ملائمة تدعم الاستثمار وأنشطة المال والأعمال، مع الاهتمام أيضاً بتطوير التجارة والتمويل والاتصالات والتقنيات والتعليم والرعاية الصحية وحماية البيئة، بالإضافة إلى تشجيع الريادة والمبادرة ونشر العدل الاجتماعي وتحسين مستوى المعيشة للجميع. إننا نسير قدما إلى الأمام في أن نكون نموذجا عالميا في التنمية المستدامة. نسعى دائما وباستمرار إلى دعم البحث العلمي وتأسيس اقتصاد يقوم على المعارف. لدينا اعتزازا كبيرا بالحاضر وتفاؤلا واثقا في المستقبل، كل ذلك في ظل وجود ارتباط قوي بين الشعب وقيادته حول أهداف واضحة لمسيرة الوطن وسياسات فعالة للتنمية الاجتماعية وقدرة كبرى على مواجهة التحديات واستثمار الإمكانات المتاحة. وإلى أبعد مدى، بالإضافة إلى دورنا المهم في تحقيق السلام والاستقرار في المنطقة والعالم. إنني أؤكد أمامكم أيها الأخوة والأخوات أن دولة الإمارات العربية المتحدة بقيادة صاحب السمو والوالد الشيخ خليفة بن زايد آل نهيان رئيس الدولة حفظه الله ورعاه تشهد تجربة فريدة ورائدة في التنمية الوطنية الشاملة، لها دور مؤثر في الاقتصاد العالمي، وتسعى دائما إلى فتح قنوات جديدة وفعالة لعلاقاتها به، آخذا وعطاء وبصفة مستمرة. إن دولة الإمارات تسير في نموها وتقدمها في إطار قناعة كاملة بأن الدولة والمنطقة لهما دور مركزي وهام في تشكيل الأمور الاقتصادية والسياسية على ساحة العالم، وأن تحقيق التقدم والرخاء في الدولة والمنطقة تبعا لذلك هو أمر على أقصى درجات الأهمية والأولوية، خاصة في ظل التطورات المهمة الاقتصادية والسياسية والاجتماعية التي تشهدها بعض دول المنطقة. هذا إلى جانب ما تؤكد عليه تلك التطورات من أهمية توافر الأمن والأمان والاستقرار كشرط ضروري لتشجيع التنمية الاقتصادية وتسهيل الاستثمارات وتنمية حركة رؤوس الأموال وترشيد شؤون الطاقة، بل وأيضا نجاح التنمية الاجتماعية بشكل عام. إننا في دولة الإمارات العربية المتحدة أيضا حريصون كل الحرص على تحقيق التعاون والتكامل الاقتصادي بين جميع دول المنطقة وعلى نطاق واسع، مدركين بالطبع التفاوت الواضح بين هذه الدول في مستوى تطور القطاعات الاقتصادية فيها، بل وفي طبيعة القضايا والمشكلات التي تخص كل دولة على حدة. في ترك المرحلة المهمة التي تمر بها المنطقة. النقطة الثالثة أن هذا الملتقى وبصفة خاصة يتيح مجالات واسعة وفرصا مؤكدة لدراسة مسيرة الاقتصاد الدولي، كما أنه يسلط الضوء والاهتمام على المبادرات الإقليمية والدولية التي تسهم كثيرا في تحقيق التقدم والنمو في ربوع العالم. وفي هذا السبيل فإننا نأمل أن يكون هذا الملتقى خطوة مهمة تدعم بإذن الله قدراتنا على تحديد الأهداف والغايات والتعامل الذكي والحصيف مع الظروف المتغيرة التي تحكم مسيرة الاقتصاد الدولي وتحدد دورنا جميعا. إننا نأمل أن يكون الملتقى مجالا للحوار والمناقشة حول قضايا الاقتصاد والتمويل ودورها في تحديد مسيرة المجتمع، بالإضافة إلى سبل تعميق الارتباط بين دول ومناطق العالم من خلال الاتفاقيات التجارية والتبادل الاقتصادي، مع التركيز على تنمية قدرات جميع الدول على التنافس الناجح على المستويات الإقليمية والعالمية على حد سواء، بالإضافة إلى الاهتمام المضاعف بإعداد القيادات في المجتمع وعلى كافة المستويات. إن ثمة حاجة ملحة بالنسبة للمنطقة العربية بالذات لتوافر الاستقرار الاجتماعي والحفاظ في الوقت نفسه على قدرة المؤسسات المجتمعية والاقتصادية والمالية على الاستمرار في أداء وظائفها بكفاءة. نحن أيضا بحاجة ماسة إلى تسليط الضوء على الظروف التي تعوق الاستثمار في المنطقة العربية، وأن نعمل سويا من أجل إيجاد بيئة سليمة للنشاط الاقتصادي تشجع على تحقيق التنمية المستدامة في جميع دول المنطقة. لا بد من الحرص كل الحرص على إيجاد أطر مؤسسية تتسم بالشفافية وتكون جاذب للاستثمارات، وتحقق في الوقت نفسه الارتباط الوثيق بين التنمية الاقتصادية من جانب والتنمية الاجتماعية من جانب آخر، مع الالتفات بشكل خاص إلى التنمية البشرية بما يشمل تطوير التعليم ورفع مستويات الرعاية الصحية والاهتمام بشؤون المرأة ورعاية الأسرة علينا أن نعمل جميعا كما يحدث الآن في الدولة للدفع بطاقات المجتمع نحو الإبداع والابتكار وربط مسيرته بكافة التطورات المفيدة والإيجابية في العالم. النقطة الرابعة في هذا السياق تتمثل في أن الأمل كبير والتفاؤل أكبر في أن يحقق هذا الملتقى أهدافه، وأن يكون بعون الله مجالاً خصباً لتشجيع التقدم والنمو الاقتصادي إقليمياً وعالمياً على السواء، وأن يكون في الوقت ذاته الملتقى الفعال لتبادل الأفكار والآراء ومناقشة المبادرات وطرح الحلول، بل وتنمية العلاقات والصداقات بما يدعم قدرة الجميع على التعامل النشط والفعال مع كافة المتغيرات والتحديات التي يشهدها العالم وبشكل متسارع، وهي كما نعلم متغيرات وتحديات تتداخل فيها الأبعاد الاقتصادية والسياسية والأمنية والاجتماعية والثقافية والتنموية. أيها الأخوة والأخوات، إننا في دولة الإمارات، وفي ضوء ذلك كله إنما نعتز كثيراً بقيادتنا الحكيمة المتمثلة في صاحب السمو الوالد الشيخ خليفة بن زايد آل نهيان رئيس الدولة حفظه الله ورعاه. نفتخر برؤية سموه الواضحة لحاضر الدولة ومستقبلها وحماية مسيرتها، بل وحرص سموه كذلك على تشجيع كل المبادرات التي تدعم قدرات المجتمع على التقدم والتطور والإبداع، وتؤكد في الوقت نفسه تلك المكانة البارزة والمتنامية لدولة الإمارات العربية المتحدة على مستوى العالم. في ختام كلمتي أعود فأرحب بكم جميعاً متمنياً لكم كل نجاح وتوفيق، ولتتذكروا دائماً أن أي نظام اقتصادي إنما هو بالأساس نظام سياسي واجتماعي، والعكس صحيح، فكلاهما يحتاج إلى رؤى واضحة وأهداف محددة وغايات ووسائل مستمدة من الواقع وإمكاناته وبل وخصوصيته وآفاق تطوره. وفقكم الله إلى كل عمل نافع، والسلام عليكم ورحمة الله وبركاته.
Your Excellency, thank you very much indeed for your insights. Thank you. Ladies and gentlemen, just before we go on to our next speaker, I just need a couple of minutes of your time. First of all, in terms of some housekeeping, I really need some cooperation on two matters for this next slot. First, there are no media allowed in the room for this next speaker. So if there's any members of the media sitting either at the back or in the room, please can I ask you to leave? NBAD would highly appreciate your cooperation on this. As soon as this session is over, we will allow you back into the room. Point number two is there's no photographers allowed in the room other than the one designated photographer. So for this session, gents, can I please ask all of you to just leave? As soon as we're done, you'll be allowed back in the room. Thank you. Just while we're getting prepped, I'd like to take this opportunity to tell you about a new initiative that MBAD has taken on for this year's Financial Forum. We've decided to create a virtual conferencing environment. What this does is it allows people that couldn't attend in person to participate at this forum. The technology is amazing. I'll show you a demo in a minute. Essentially, what it allows someone to do is to log on to a system where they will see a virtual world created. And we've recreated this auditorium, the exhibition area, etc. So whoever logs on can actually walk themselves through the exhibition area, see each of the kiosks. They can actually interact with the kiosks and download any brochures that they would get if they were here in person. They can interact with other people that have signed on. Then they can come into the auditorium in the virtual world and listen to recorded footage of whatever you see here on stage. So for instance, Sheikh Nayan's speech that he just delivered will be on that platform to view later on today. The idea behind this is first, obviously, to give access to people that couldn't come in person, but second, to also broaden the reach and the footprint of this event. Thus far, it has largely been a regional event with few visitors from overseas. What we're now trying to do is really make this global. So from this year onwards, we will be inviting a lot of investors, counterparties, bankers, and people with an interest in this region to sign up to this virtual conferencing facility so that they too can benefit from the content that we're all sharing today. So there, can we run the video, please? Hi. Yes, you can hear me. Here you see is the avatar who's signed into the conference. You can take people into separate meeting rooms. So if you meet another person who's signed in and you want to go and have a meeting, you can go have a meeting. As you can see now, he's walking through the conferencing area and find his own way to the auditorium. And as all of you have done today, he can come, participate, and see exactly what's going on the stage in terms of content. There's also a facility for anyone who signs on to ask questions. So if they want to ask questions and submit questions for the speakers, that's also possible. This technology, ladies and gentlemen, is really phenomenal. We've tried this for the first time this year. We're confident that as the years progress, we will get more and more involved in this. And this certainly allows a lot of investors around the world who are indeed interested in the MENA region to sign into this kind of facility and to participate at this kind of event. That's not me, by the way. There's been a small army of people working on this behind the scenes, and they've done a fantastic job. We've already had some really positive feedback from investors as far as Australia, who obviously couldn't make it for the forum, but the fact that they can actually sign in and use this kind of virtual conferencing facility is of great use to them. So, we really appreciate the efforts that everybody's put into this, and we look forward to getting more and more participants on board next year. Ladies and gentlemen, that was a very, very interesting insight into the European situation. Our next speaker is going to take a slightly different perspective on the same subject matter. Please join me in welcoming the Right Honourable David Miliband, former British Foreign Secretary. Thank you.
Your Highness, Excellencies, Mr. Secretary Baker, ladies and gentlemen, it's rather cruel of the organisers to put a British politician on straight after a French superstar. A former French president, but I don't know about you, but I had a sneaking suspicion that some of the problems on the centre-right in France at the moment may in the future see their resolution through the political resurrection of Mr. former President Sarkozy. I don't think we've seen the last of President Sarkozy in politics. I saw the glint in his eye there of someone whose passion for politics remains. It's a great pleasure and honor for me to be back in the UAE, to be back in Abu Dhabi. I was last here in November for a forum on Middle East peace and security. And I've been asked on this first day of your forum, which is really devoted to Europe and to the UAE, to talk about stability and prosperity in Europe from a UK perspective. And I think I should probably declare my own prejudices right at the outset. I'm not here speaking on behalf of the government, I'm not speaking on behalf of the opposition, but my prejudice, I think, is important and you need to know it. I'm a child of Central and Eastern Europe. My parents were refugees from Poland and Belgium to the United Kingdom, my father in 1940, my mother in 1947. And so I think it's important to declare at the outset, or address at the outset, what I think is a fundamental question for regional associations like the European Union. Some people say that in a smaller world, a more connected world, a hyper-connected world, a more open world, then regional associations like the European Union are less relevant. They're somehow a residue of the 20th century and don't belong in the networked, flexible world of the 21st century. Now, I can see that case. Vietnam will have 85 million people this year. It's a booming country. Your own Emirates here are new centers of economic power. But I still believe that in this globalized world, regional associations are actually going to become more important in the 21st century rather than less important. The first reason they're going to become more important is that I think global governance is going to remain relatively weak. Secondly, I think that interdependence is going to grow. And it's a very simple principle that if your neighbor's house is on fire, then your house is on fire. And I think the pressure for greater regional coordination and integration is going to be felt not just in Europe, but elsewhere. And of course, in the Gulf, the development of the Gulf Cooperation Council is in a way a pointer to that kind of regional cooperation. I bring your attention to the Pacific Alliance in South America. That's Chile, Colombia, Mexico, and Peru. Together they have a gross domestic product 20% greater than Brazil, and they are forming a union, a Pacific Alliance, whose goal is a single currency. So I think it's important at the outset to declare that prejudice. And in the course of about 25 minutes of talking, and then I think we have time for questions. I'm certainly very happy to take questions. I want to give 5 takeaway points, 5 main themes of what I'm going to say. The first is that it's very, very important that we separate the deep trends from the short-term policy ructions. And I think that there is good reason, actually slightly contrary to what Mr. Sarkozy said, I think the short term for Europe is going to be very tough. I think the next 2 to 5 years for Europe are very tough. But I think in the medium to long term, 5 to 10 years and beyond, Europe is going to be a very strong partner for you in the Gulf. Second takeaway is that in Europe, the debate about austerity has become confused with the debate about reform. The debate, in other words, about macroeconomic policy has become confused with the debate about the structural drivers of growth and competitiveness. I would argue that austerity has become a dogma and reform has become a catch-all phrase that has lost its meaning, and I think we need to separate them out. The third point, the third takeaway, is that politics and economics are pulling in opposite directions at the moment. In the 90s, I think after the end of the Cold War, Secretary Baker's in a very good position to reflect on this tomorrow. In the 90s, in the flush of globalization, politics and economics seem to be pointing in the same direction. Today, the economics points, for example, to more sharing of sovereignty at an international level. That's very tough politically. The economics points to more migration. That's very tough politically. The economics points to shifting the burden from our legacy of welfare debts to the old to investment in the young. That's very difficult because in our countries, the old are more likely to vote than the young. But Western economies are facing this tension between politics and economics. And my own interpretation of the Italian election result, which I'll say a bit about later, is that that's what you saw, politics and economics pulling in opposite directions. The fourth point is maybe again to a bit of a gloss on what President Sarkozy said. The euro is not the same as the EU. It's a vital part of the EU. I think that you can make the case that the collapse of the euro would be a disaster for the European Union. But the European Union, as a union of 27, in July, 28 nation states, has a much wider range of economic, environmental, social, political, foreign policy endeavors in which it's engaged. And I don't think the two should be confused. And what's interesting is that it is alliances across the divide between those in the euro and out of the euro that are important in areas like energy or foreign policy. And the fifth and final point I want to make to you is that Britain and Europe are better off with the UK in Europe. My own view is that Britain will not leave the European Union, but it is not in our interests or in Europe's interest for the defining question for the next 5 years to be whether or not Britain will leave. So, let me talk a bit about trends and risks, because that's what I've been asked to focus on. And I want to start not with the micro within the European Union, I'll come to that, but with the macro. Because the truth is that the big shifts in power that are going on across the globe are buffeting European societies, European economies, and European politics. The American columnist David Brooks, who writes for the New York Times, had an interesting phrase in a column about a month ago. He talked about the distinctive challenge of, quote-unquote, rejuvenating mature economies. He was talking in the context of President Obama's State of the Union address on January the 21st. You have your own challenges in building new societies, new economies, new politics in the Gulf. The rejuvenation of the mature economies and democracies is a distinctive challenge. And it's distinctive because we in Europe, the United States in a way the same, are buffeted by four great forces, the like of which we haven't seen before. The first is the massive shift of power, the single fastest shift of power from west to east that the world has ever known, but also a shift of power from north to south. The fact that 7 out of 10 fastest growing economies in the world are in Africa in the last decade tells you an important story. Second great change is the rise of the open society. The fact that transparency is now the order of day in business and in politics. The fact that the cardinal sin is not getting it wrong but being a hypocrite and saying a different thing in public than in private. These are the features of more open, in a way, more democratic societies. And that transparency and that impact of public opinion is being felt in Europe. It can no longer be an elite project. Every government is a coalition with its own people. Thirdly, we in Europe are facing a resource crunch. The resource crunch predated the credit crunch. Not just the oil price, $147 a barrel in 2007 before the credit crunch, but the rise in non-oil commodity prices in the last 10 years has outstripped the fall in those non-oil commodity prices of the previous 100 years. So there's a resource crunch facing Western economies as well as a credit crunch. And then the fourth and final new feature that we confront is in this world of interdependence, where what each of us do in health or in environment or in economy affects others. The degree of this interdependence means that although the big countries like France and Germany that President Sarkozy talked about are the agenda setters and in some ways the deciders, it's often the weakest link in the chain that can be most decisive. I mean, who would have thought if we'd been meeting here in 2007 or 2008 that Greece, an economy that represents 2% of the European economy, that Greece could become not just the biggest threat to the European economy, but that could then multiply to be the biggest threat to the global economy. So the weakest link in the chain is a new feature of this interdependent world. And in confronting these challenges, I would put to you that Europe is burdened by some demographic challenges. It is burdened by some weak innovation in a business. It is burdened by some legacy spending commitments. But it's also better equipped to deal with some of these challenges, not just because it's the world's largest, richest single market, but because of its very strong legal systems, but because in aggregate, the European Union is actually in trade balance. Actually, the Euro's in trade balance with the rest of the world, but the European Union as a whole is in trade balance. The debt to GDP ratio of Europe as a whole and of the Eurozone is actually lower than the United States or lower than the UK, actually. And I also think it's relevant that the resilience of European institutions is an advantage that is being underestimated. Part of that resilience comes from something that Secretary Baker played an absolutely instrumental role in creating nearly 20 years ago. President Sarkozy, I think, was right to talk about the legacy of the Second World War. But that's actually the day before yesterday. Yesterday, for many Europeans in Central and Eastern Europe, is the experience of the Cold War, of living under communism. And the 8 countries that joined the European Union in 2004, they came from the yoke of communism. They were part of the Soviet Empire. They are now some of the most enthusiastic members of the European Union. They have rebalanced the European Union. And I think it is extraordinary. It'll be interesting to talk to Secretary Baker about this later today. A country like Poland has become an absolutely pivotal player in the European Union. And people who would describe themselves as transatlanticists 20 years ago, who looked to the United States first for inspiration, now see their home in Europe. These are strengths of the European Union that I think we are in danger of underestimating. And I think those strengths speak to something important, which I don't have time to dwell on, but I do want to mention. The years 2008 to 2012 were not good years for relations between the EU and a vital country for this region, which is Turkey. Those were years in which the commitment of Europeans and the commitment of Turks to the European project seemed to wane. I would put it to you that we're seeing a bit of a turn, that some of the problems that Turkey sees on its borders, but also some of the problems that Europe has internally, are pointing to the fact that we've bottomed out the relations between Europe and Turkey, and I think they're going to rise again. The magnetism of the European Union as a strong legal, strong economic, strong political order, I think, remains. Let me deal with the euro directly and give you a UK perspective on it. President Hollande, the successor of President Sarkozy as President of France, has said that the crisis of the euro is over, but the crisis of the Eurozone is not. Now, you might think that's a very French, very dialectical way of looking at this, but I think it's worth teasing out what he meant. I think the truth is that over the last year, the euro has been saved by a series of political developments that it's important to understand. The first is the commitment of Europe's richer nations to back up the euro, I'm talking about Germany, but also countries like Holland, that has come through very strongly over the last year. I think a year ago, 2 years ago, many people in the Anglo-Saxon world were underestimating the political commitment that existed in Europe to maintain the euro. Secondly, the European Central Bank has interpreted its remit in a maximalist direction and got the backing of Chancellor Merkel to do so. The commitment of Germany to more Europe, and I want to come back to this, is real. The relative quiescence, the quietude, the relative way in which European public opinion has taken real hardship has, I think, struck people. Remember, there's 50% youth unemployment in Spain, yet not a single Spanish political party with more than 10% of the vote is proposing to get Spain out of the euro. You've got very strong political commitment. And in elections, the Dutch election, the Greek election, you actually saw a move towards the center and away from the extremes. Now, I suppose the question for us today is, does the Italian election result invalidate that sense that there'd been a year of political and economic progress? My interpretation is no, it doesn't invalidate that. The problems of the Eurozone, of an unbalanced Eurozone, are real and ongoing. Frankly, there's an imbalance between France and Germany at the moment. Since President Sarkozy's famous walk on the beach in Deauville with Mrs. Merkel in 2010, the Franco-German relationship has not been in equilibrium. It's been a much more dominant German position. The balance between Keynesian economists and followers of Austrian economics, that's not in balance in Europe at the moment. The balance between the Council of Ministers representing the nations, the Commission representing the European interest, and the European Parliament, that's not particularly well balanced. And obviously the balance between core and periphery isn't right. German GDP is 4% above its pre-recession peak. The average for the periphery is 8% below its pre-recession peak. So there's imbalance economically as well, and there is the final imbalance, which I think explains the Italian election result, is the imbalance between austerity, macroeconomic austerity, and structural reform. Austerity is leading to the collapse of investment, and it's leading to the collapse of investment in some of the key drivers of competitiveness and growth, in the private sector actually as well as in the public sector. The only convergence is coming negatively from lower wages and higher unemployment rather than positively through investment and education. And I think that explains the Italian result. It's a protest against the policy mix that is being pursued. It's not a protest against the euro as an institution or the European Union as a body. And I think it's worth just remarking, and we can come back to this in questions, to some extent, the European macroeconomic debate is behind the debate in the United States and to some extent behind the debate in Japan as well. Many of you will have read the letter from Commissioner Rehn, the Vice President of the European Commission, complaining about the IMF study on fiscal multipliers and saying it was an unhelpful contribution to the debate because it exposed the damage that austerity policy was doing, collective austerity was doing. And I think that speaks to the sense that European macroeconomic debate hasn't yet caught up with the way in which central banks around the world, in the US, actually in the UK as well to some extent, are playing a much more activist role. And I think the macro debate needs looking at, because the truth is that the mix of fiscal, monetary, and industrial policy in Europe at the moment is pro-cyclical, not counter-cyclical. And that is the taboo that needs to be broken in Europe, in my view. Third area I just want to touch on, and that is that although I am quite critical of the response of Eurozone leaders to the euro crisis, although I'd have liked to see much greater integration actually to match the economic union with closer political coordination, I think those of us from the Anglo-Saxon world often misread our continental neighbors. And I hope you'll allow me to set out some of the areas where I think we misread what's going on the continent of Europe, because I think it's relevant to your investment decisions. Here are just 4 brief examples. Firstly, France. I don't know how many of you remember the front cover of The Economist magazine. Its title was The Time Bomb Under Europe, and it was a man with a baguette, a French baguette. And it was a rather typical view of the way Anglo-Saxons view the French economy. Essentially, we overestimate the problems of the French economy to the same degree that the French underestimate the problems of the French economy. But I think it's very important to recognize that while an economy like France does have real problems, it actually has higher productivity than the UK. The complaint from the US tire manufacturer last week about the fact that French working hours were 1.5 hours on average lower than the European average actually speaks to the higher productivity that exists in France. It has some outstanding companies, often backed actually by some pretty active state support. Its demographic position is better than most, and its government is actually doing more reform than it's given credit for. So I would say to you, don't believe the horror stories about France as the new weak link in Europe. Second point, the German commitment to the unification of Europe, to match the unification of Germany, is absolutely profound. I think I would put it this way. In discussing Mrs. Merkel's approach to economic management, people often refer to the fact that her father was an East German pastor. He was a church leader. He was extremely prudent. He was very concerned that his household didn't spend more than they earned. But there's a political father to Mrs. Merkel who I think is underestimated, and that political father is Helmut Kohl. And what Helmut Kohl, Chancellor Kohl, taught Mrs. Merkel was that you could not have a unified Germany unless you had a unified Europe. And so the second thing that I think is misread in Anglo-Saxon debates is about what's the German commitment to European unification. I would say it's absolutely deep and profound, and anyone who wants to bet against Europe in the medium term is betting against Germany. And I think that's a dangerous bet to make. Third point I won't dwell on is this point about the emergence of new pivotal players in Europe like Poland. I not just because I'm British and want Britain to remain an influential player in Europe, I think the idea that you can reduce Europe to France and Germany is not correct, actually, because it would be neither efficient nor legitimate for a union of 28 countries to be driven only by those two. Legitimacy maybe you can deal with, but I don't think it would be efficient either. And I think that the role of countries like Poland, some of the Scandinavian countries that are developing an economic model that works, and of countries like the UK is important. Just a fourth point, which I think is missed in British debates, Anglo-Saxon debates maybe, is that the European institutions like the European Commission and the European Court of Justice are not the enemy of liberal economics. They're actually the guarantors of liberal open markets. The expansion of the single market in services that people across the political divide in Britain want to see requires strong European institutions. It will not be achieved by weak ones or by the devolution of power back down to nation states. So if you're looking for big change points for Europe, next year, the nomination of a new commission, a new president of the commission, new commissioners in November 2014, I think is important. Let me talk a bit about Britain and then conclude. I sit on the opposition benches in the House of Commons. But when I talk abroad, I don't like to decry my own country or even attack the government of my country. So let me try and be as neutral as I can in talking about Britain's engagement with Europe. I think if the Prime Minister was here, if David Cameron was here, he would say that he and his government have a positive view of Britain in Europe. He would say that they have a clear view of how Europe can become more economically competitive, that there is the imperative of a looser relationship between the nation states of Europe to recognize the globalized world in which we live. And he would say also that this new outward-looking, looser Europe needs the support of its own people, and that Europe's elites can no longer afford to shy away from the judgment of their own people. Now, in other words, he has a reform agenda and a referendum agenda, which some of you will have read about, and I've been asked to just say a word about. My view is that the reform agenda is right, but it needs to be expanded in ways that I will come to. And the referendum commitment undermines the reform agenda because it leaves in the minds of too many other Europeans whether or not we're serious about staying in. But I honestly believe that the Prime Minister doesn't want to pull out of Europe. He has taken what Prime Minister John Major calls a gamble, but I think it's incumbent on all of us to make sure, all of us involved in British politics, to make sure that it's a gamble that doesn't rebound against the British national interest. And absolutely key to that is to recognize that the real challenge for Europe is to think about the things that the European Union does, not just things that the euro currency area represents. And I think that that comes down to the following points. If you buy my argument about the role of regional associations in a globalized world, then I think you'd want to see the European Union addressing the following issues. You'd want to see the European Union of 27, soon to be 28 countries, expanding its single market and engaging in the open trade discussion that President Obama has launched. That takes 28 countries because all of them have a veto. You would want to see, I think, a European Union making energy policy absolutely central to its view of the future. Not just using its negotiating clout with the Russians, because honestly, if one thinks about this in geopolitical terms, if the Russians are negotiating bilateral agreements with different European countries who are 70, 80, 90% dependent on Russian gas, they're in a much stronger position than if the Europeans come together and negotiate on a common basis. So I think energy policy, you'd want to see us being much more serious about energy policy. You'd want to see us playing a role as global standard setters in product markets. You'd want to see us taking further our incentives for low-carbon economic development. And you'd want to see us in a concerted engagement on foreign policy, not just in our own neighborhood to the east, in the Balkans, and in Ukraine, and in relations with Russia, but also to our south, into the Middle East, and in our relations with the other great powers around the world, whether the US, China, or the emerging economies. In these areas, you could also actually make the point that you'd want a European Union that was active on migration issues. There are 200 million people on the move around the world today, more than ever before. And the European Union needs to be engaged and active on that. In these areas, the European Union should be the answer to the old conundrum, which is that the nation state is too small for some big issues and too big for some small issues that need to be dealt with more locally. And what I'd like to see is a British government joining countries like Poland, which is not in the euro, joining countries like Denmark, Sweden, not in the euro, in forging a European Union compact, a European Union reinvention that is as strong as the reinvention of the euro that is necessary and that will need to be brought about through the move through banking union to some form of political union. Sitting in the Gulf, standing in the Gulf today, it seems to me that that is an agenda for Europe that speaks not just to the past, which is important, but to the future, which is even more important. And in this future, where economic power is shifting, where there is a rise of the open society, where the resource crunch is a real and present danger, where interdependence is evident every day, I think that is a positive role for the European Union and one which it will be able to play more effectively with a strong British presence. Thank you very much indeed.
Are we okay for some
Yeah, of
Q&A?
course. Yeah.
Okay, we have some time for some Q&A with David. Clearly, we've had a lot of input from David and previously Mr. Sarkozy on the European situation. Any of you have any questions regarding the European situation that you would like David to answer? Yes, sir, over there.
Hello, thank you. Good morning.
Good morning.
I would just, I'm curious to, you mentioned about the European migration and in particular, perhaps to the United Kingdom. How do you view the recent changes and the impact of upcoming European states in the Euro Union and the numbers and their impact on employment in Britain?
Well, I mean, my belief is that countries which end up cutting themselves off from the rest of the world on the grounds that that will protect employment in their own country are on the path to disaster. Every country needs to manage its migration flows, but the old, what we were all taught in, I don't know, third or fourth economics lesson about the lump of labor fallacy is true. And Britain is a country which thrives. It gets its dynamism from being open to the world, not closed to the world. That's true in industry and financial services. It's also true in areas like universities, where we've got 80,000 Chinese students in British universities. We've got, I think, 12,000 students from across the Gulf in British universities. Now, you have to manage your migration system, but I think the idea that we'll boost employment in Britain just by cutting off the flow of people from outside doesn't actually add up. We introduced transitional controls for the entry of Bulgaria and Romania into the European single market. I think that's right, but there's a wider point. Let me make this. Look, 10 years ago, the protests against globalization and free trade came from the developing world. Now the protest against globalization comes from the industrialized world. And I would say to you that is very dangerous. When Western countries start playing with protectionism, they're setting a very bad example, and they're on the path to a very dangerous economic future. And I am concerned that we don't have a creeping protectionist impulse in the West as a response to its economic difficulties, because actually I think that will make them worse.
Superb.
My question is simple. That is, when the US is trying to recover, but whereas we see London is being challenged. On the other hand, Japan is showing tremendous amount of growth. Its highest peak it has achieved in the markets. Whereas China is showing tendencies of toughness in terms of their manufacturing base. If you take these four blocks, which are very important for global economic play, what do you take for 2013 as regards financial markets? That's one question.
Sorry, explain I didn't catch the beginning of your question. There was something.
No, I'm telling US is trying to recover.
The US is what?
Trying to recover in its economic situation.
US is trying to recover.
Okay, yeah.
And London is being challenged. UK is being challenged. Japan is at its peak. It has come out of its 20 years plus recession. China is showing tendencies of slowness in terms of its manufacturing base. If you take these four blocks, which are very important for global economic play, what does it take for 2013 in financial markets? That's one question. Number two is, internationally we see LIBOR as a benchmark rate for guidance. But the recent scandal has shown tremendous amount of trust deficit. How it is being addressed now? Thank you.
Good. I mean, I think that my reading of the short-term prospects is it's going to be a very tough year or two. Very tough year or two in Europe. The locomotives of growth in Europe, which are obviously Germany, is a prime one, 0.5% growth. It's talking about France tipping into recession, Britain bumping along the bottom. The fact that the US is growing, we'll see how this fiscal cliff debate plays out. That helps. Countries like Britain have big exposure to the US. The fact that the Chinese have avoided a hard landing is obviously good. But I would say the short-term prospects are pretty tough. And you're seeing that with the pressure on sterling at the moment. Now that I'm not in government, I can mention the word sterling without it seeming like I've gone off message. But it seems to me that there are fundamental grounds why you're seeing that pressure. And I think that the short term is tough. Having said that, I think that there are, beneath the surface, strengths that will come back, actually. And the fact that we're trapped in this sort of balance sheet recession at the moment is one that I think think has posed a set of challenges for decision makers, which over the last year or two they've struggled to come to terms with. But I think with some of the developments you're seeing elsewhere, I think you'll see Europeans beginning to rebalance. And so I would say beyond the 2 to 3 year, I can see it as more positive. On the LIBOR thing, look, I think that this has gone to the heart of not just the financial markets, but the British political and economic establishment. And there is, and I think you used the phrase trust deficit, it's a very good phrase. There is an absolute recognition, first of all, that that trust deficit is real. And secondly, that you can lose trust much faster than you can gain it. And that gaining it is about actions that are deep and serious and followed through. And it's not my policy area, it's not my remit, but I would say that from a sort of British national interest point of view, this was a wake-up call which is being taken extremely seriously. And I think there is an absolutely iron determination to continue to make London a fantastic financial centre.
I think we have time for one more. Any questions for David Miliband? Okay, over there, please, at the back.
Hi.
Hi.
In the news, we heard recently about the UK losing its AAA rating. Do you think that will impact significantly over the next 2 or 3 years? And I mean, can we see even more credit losing over the next few years? Is that a major impact, or you're not considering it as significant?
You're tempting me into the political fray here, obviously, but let me resist. I mean, my view is that the ratings agencies are lagging indicators, not leading indicators. They're telling you what everyone else knows.
Absolutely.
And sorry, there's probably people here from the rating agency, I don't know, who are very offended by this, and they can tell me I'm wrong. Well, actually, this is the last question, so maybe they can catch me afterwards during the dinner or something and tell me that I'm wrong. But the open flow of information means that it's not news to anybody that the British economy, which had a recovery from the recession up to 2010, has double dipped and is threatening to triple dip. And so I would say it would be wrong to say the situation is a concern, but the conclusion of the ratings agencies isn't so much of a concern. What needs to be addressed is that in a time when the private sector is deleveraging quite hard, when the consumer is very, very cautious, and when government does face a big deficit, where is the locomotive of growth going to come from? And I think that what we've seen in a way is a laboratory experiment contrasting US and UK macroeconomic policy. Between 2008 and the middle of 2010, US and UK macro policy was in lockstep. Yeah. And since then, there's obviously been a big shift in Britain under the label of austerity. And so, for example, in the US, President Obama and Congress agreed to continue the payroll tax cut. Yeah. Despite the fact that there were longer-term issues on entitlements, etc., to address. I mean, to be honest, that's worked much, much better than what the British government has tried, which frightened consumers, left businesses thinking where were their markets going to be. And although it brought calm in credit rating agencies for 2 years, it didn't actually address the economic fundamentals. And I think that the three-card trick for European economies is to address the banking crisis that was the origin, to address the sovereign debt challenges that are a consequence, but never to forget that unless you can stimulate incentives for innovation, you're not going to be able to address either of those two problems. And it seems to me that it's in the private sector flows from the banking industry into business, from the public sector flows into infrastructure and into spending, that we've got a macroeconomic problem and that it needs to be addressed. So I would say the macroeconomic problem is big. The rating agencies are late to the game.
Okay, thank you. I think in the interest of time, we're going to have to call it a day there. but David is going to stay with us, so you will have an opportunity to ask him further questions. Ladies and gentlemen, please join me in thanking Mr. David Miliband. Thank you. Thank you very much. Thank you very much. Okay, we're now going to zoom in a little to matters a little closer to home. Please be seated. Okay, as I was saying, we're now going to zoom in and talk about matters closer to home. Those of us that work in the local markets and even those that work in the international financial markets have been talking for quite some time about the need to establish local debt markets here in the UAE. And on that subject, we are extremely honored to have with us the governor of the UAE Central Bank, His Excellency Sultan bin Nasser Al Suwaidi, to talk on that subject and give us some insight from a central bank perspective. Your Excellency.
بسم الله الرحمن الرحيم. السلام عليكم ورحمة الله وبركاته. Excellencies, distinguished guests, ladies and gentlemen, I would like first to thank the previous speakers. I benefited a lot from their speeches. His Excellency Sheikh Nahyan bin Mubarak Al Nahyan, and former President of the Republic Française, Nicolas Sarkozy, and the Right Honorable David Miliband. I am pleased to join you at this important global financial markets forum. I am grateful for the invitation by National Bank of Abu Dhabi, and thanks for His Excellency Nasser Ahmed Al Suwaidi and the CEO and the senior staff of NBAD. As the past experiences have shown, the existence of a robust bonds market is necessary for encountering financial crises. During the Asian financial crisis in 1997, countries that had a developed domestic bonds market did better and recovered faster than countries with no or with underdeveloped domestic bonds market. On the other hand, regulators should always understand the sources of liquidity in their markets and work together with regulated entities to estimate risks relating to liquidity, monitor such risks, and put mitigating measures. As part of this process, a domestic bonds market would be an essential element. I recall that in the year 2008, we have seen a massive outflow of funds during the month of September. As a result, liquidity at UAE banks became in short supply. Then we entered into a liquidity crisis, which made Central Bank of the UAE to respond by providing the needed liquidity to all banks. This worked well immediately due to the small size of the mismatch between domestic deposits and loans and advances at banks. Also, lack of liquidity at a domestic financial market would normally lead to declining of values and the shrinking of financial trade volumes, which would in turn create difficulties for all parties dealing in the market. And since it seems there is a strong link between markets activity and the real estate sector and other sectors of the economy, one would expect that those sectors will witness difficulties as well. If shortage in liquidity, if shortage of liquidity pertains for a period of time. In other words, the experience of a robust domestic bond market is likely to provide higher levels of liquidity within the economy, which would help to mitigate the negative impact of financial crises. Moreover, implementation of Basel II and Basel III in the coming years will require banks to maintain higher ratios of liquidity. This would definitely discourage banks from extending sizable corporate loans. Banks are also likely to resort to issuing bonds for financing themselves. However, in the absence of a robust bonds and sukuk market, banks will be forced to buy bonds from foreign markets, and if such trend is to develop, we will be exposed to higher risks in times of crises. For these reasons, we must be perfectly aware of the fact that developing a bonds and sukuk market is almost essential for dealing effectively with future financial crises. In a seminar we held at the Central Bank in November 2012, we identified the elements of a domestic bonds and sukuk market to be: one, the importance of government issuing of treasury bills, bonds, and sukuk to create a yield curve in dirham. Number two, encouragement of major corporations in the UAE, including GREs, to finance themselves and their projects through issuance of bonds and sukuk instead of borrowing from banks. Number three, encouragement of the establishment of long-term investment funds like venture capital funds and other specialized funds. Number four, enhancement of governance in the operation of issuance of bonds and sukuk, and enhancement of governance within debt market institutions. Five, the classification of bonds and sukuk based on eligibility for discounting these instruments at the central bank, emphasis on transparency in the financial reports of corporations issuing these instruments is an important part of this process. And sixth and last, necessity to establish an independent company for clearing, settlement, and safe custody, and to connect this company to central bank payment systems. A mechanism for classification of bonds and sukuk for the purpose of discounting them at the central bank would require issuing companies to have a certain level of disclosure in published financial statements, transparency in managing their affairs, and implementation of governance as best practice. In addition, establishing of an independent company for clearing, settlement, and custody, and linking it to the central bank's payment systems would be essential for boosting efficiency and accuracy at the domestic bonds and sukuks market. Excellencies, ladies and gentlemen, before I conclude, I would like to thank National Bank of Abu Dhabi for the excellent arrangements. Thank you for your attention.
Your Excellency, thank you very much indeed. Thank you. Please. That's fine. Thank you very much, ladies and gentlemen, for your attention. Just before we break for coffee, just a couple of announcements. First of all, in the interest of time, could I ask you all to be back in the room in 15 to 20 minutes max. We still have a couple of sessions to go through post-break. One is a very prolific panel discussion. We have representatives of 5 prominent UAE entities on this panel. After that, we have David McWilliams, who those of you that were here last year know very well that's not a session to be missed. So please, back in here in 20 minutes. Thank you very much. Okay, ladies and gentlemen, welcome back. I know there's still some people filtering through, but in the interest of time, I think we're going to make a start. What we have now is a panel discussion based with UAE entities. We have our General Manager of the Corporate Coverage Group, Sami Al-Kubaisi, as the moderator. The topic of the panel is to look at how UAE entities are affected by global challenges and how they're positioning themselves in the global context. So I'll hand you over to Sami Al-Kubaisi, our moderator. Thank you.
Thank you, Siobhan. Just to summarize the session we're having, given the time limitation we have and the panelists and the type of panelists we have, we want to make sure that we get the main messages out, and we're going to take you from the macro level discussions we had earlier this morning to a more focused Abu Dhabi directly related corporate entities. As per Siobhan mentioned, the panel is focused on Abu Dhabi corporates and their context within the global economy. Just to do a quick introduction to my panelists, I would like to start with Mr. Abdullah Al-Mazroui. It's a great honor, sir, for you, given your busy schedule after reading your biography, and you're on the board of many of the companies here. Just to summarize a few, you're a board member of the Abu Dhabi Economic Council, the chairman of Arab International Logistic Company, Aramex, leading provider of comprehensive logistics, as well as DEBA Ltd, and Chameleon. You're also on the board member of Emirates Insurance, chairman of the Emirates Insurance Company, National Investor Corporation, InvestCorp, and Dun & Bradstreet. In addition to this, you are the CEO of the National Bank of Abu Dhabi and the last UAE national CEO for the National Bank of Abu Dhabi. It's a great honor to have you here on the panel. Our next panelist is Mr. Tony Douglas, the Chief Executive Officer of Abu Dhabi Ports Company. He's responsible for steering the development of operation of ADPC, extensive portfolio of multi-billion-dollar projects, including Port Khalifa and Khalifa Industrial Zone Abu Dhabi, KZAD. Before taking his current role, he was Chief Operating Officer and a Group Executive designated for UK headquarters engineering giant Lang Rorock. Next to him is Mr. Carl Sheldon, is a member of the board and TAQA Chief Executive Officer. Mr. Sheldon held key management position with TAQA. He joined as a General Counsel and Deputy General Manager and was promoted to General Manager in 2009. Prior to joining TAQA, Mr. Sheldon was partner with Allen Overy LLP, where his main focus was the energy sector. The gentleman next to him, another colleague banker of mine, Mr. Simon Cooper, Deputy Chairman and Chief Executive, HSBC Middle East and North Africa. Mr. Cooper was appointed as Group General Manager of HSBC in May 2008 and is responsible for HSBC Group business in the MENA region. He's a board member of HSBC Middle East Limited, Deputy Chairman, HSBC Bank Egypt, Chairman, HSBC Bank Oman, and the Saudi British Bank. Prior to that, he was President and CEO, HSBC Korea. And on behalf of Mr. Dr. Nasser Mansouri, CEO of Etihad Rail, he was not able to make it today due to some business engagements. However, he sent to us Mr. Paul Green, CFO at Etihad Rail. Paul brings the organization over 25 years of professional management and financial experience with both leading multinational and pioneering Gulf-based businesses. Paul has extensive experience in strategic corporate finance, M&A, and fundraising. Most recently held the position of CFO at the private equity real estate firm, and previous to that, he was at Limitless, a part of the Dubai World Group. Thank you, gentlemen. And I would like to enter right away to the main themes of the the panel, and then zoom into each business of yours and have the more direct questions to the business related to your entities. While it's true that the region have very resilient in terms of weathering the effect of the global macro challenges, there's still challenges within the region. And that's more related to companies such as Taqa, who have more of a global reach. Mr. Sheldon, can you just summarize what is the impact of the global economy and what challenges and opportunities that have you found so far?
Thank you, Sama. We're present in 11 countries. More than 60% of our business is outside the Emirate. Our business roughly even split between wholesale water and power generation business and an oil and gas production business. So the oil and gas business completely commodity exposed. The power and water business, for the most part, fully contracted. And so for us, the steady annuity style earnings out of the contracted power and water business helps us withstand volatility in the commodity exposed part of the business. You know, the global outlook for us, I think, is quite buoyant. We've had a very strong oil price that's supported the oil and gas business, and you know, change in the region has provoked a series of opportunities. So this year we'll be focusing heavily on 2 new country entries, one in the north of Iraq, both on the oil and gas and on the power side, and the other in Turkey on the power side, where you know the rising expectations of young and growing populations in the region include obviously the expectation of reliable utilities, and that brings big opportunities for us. And our ability to access capital and be a capital exporter into those markets is defining, because I think as the utility space in the developed world, you know, and to an extent the financial communities, financial institutions struggle to provide capital, you know, that brings opportunities for us.
Sure. And we're going to tackle this question later on, or this challenge later on. Mr. Abdullah, from the private sector, within all the companies you head or share, what are the challenges you see most, other than the loan side or the debt side or the capital raising side, that you face since the global crisis?
Well, the global crisis really caught everybody by surprise, and I think the private sector in the Emirates, especially those corporate with high leverage, found themselves really above the water, and it was a really struggle, especially what they faced with the difficulty of collecting their receivable as well, because during the crisis everybody was trying to keep the cash in the box. So it was really a challenge. Only those corporate where they had a good and strong balance sheets were able to cruise through the crisis.
Mr. Simon, from a banker's perspective, the UAE continues to grow its footprint as a hub for the business. What role do you think the bank sector should play in supporting the continued regional growth of the UAE platforms?
Look, I think the gentlemen here with me on the panel are really the engines of the growth that you've seen in the UAE. So as a bank, what we have to be is the enablers of that growth and the continued growth. And I think there are 2 sort of broad streams where I see, you know, UAE growth continuing, and I see, you know, banks continuing to play, you know, a significant role. The first is one of trade finance. You mentioned, you know, the UAE really is a hub in terms of global trade. You've seen non-oil trade last year somewhere around $970 billion, growing at 12, 13% per annum. That trade needs financing. It needs connectivity provided by financial institutions such as ourselves, such as yourselves, to facilitate that trade growth. And I think the other big engine of growth for the region is infrastructure and utilities. I think the government investment to really help drive the economy in those sectors has been pronounced. You've got some $80 billion pipeline coming up between utilities and infrastructure in the next few years. The banks have to allow these companies to access capital, be it in debt, be it in capital markets, and facilitate that economic growth going forwards. I think if you take those two and then you look at the future, and I think the banks then have a more significant role in how the industry develops and helping to drive the UAE as a regional financial hub. So they have a role in terms of looking to develop the capital markets, looking to bring international best practice to the UAE, looking to introduce things such as netting, which will, I think, add tremendously to the depth of the UAE capital markets, enable people like Carl to continue to access capital for his ambitious growth plans. So I think we have a big role to play economically. I think we also have a role to play socially. I think the need to train, the need to participate in Emiratization, the need again to bring best practice and education into the industry and to continue the growth that the UAE has seen in financial services is something that I think banks such as ourselves, such as yourself, take very seriously.
Perfect. Thank you very much. Another topic that's close to my heart, and I think everyone here who was in the midst of the global crisis, sustainability. And we've seen the UAE and the region in the recent few months announcement of new projects going back on track, government support, announcing that there's going to be a certain amount of money in billion terms going to be invested over the next 5 years. And one of the questions that arises is, do we think that it's a short-term growth in the region? Have the regional economies learned from the mistakes made in the past? And are we following a more sustainable growth path? And I would like to direct this question to Mr. Tony Douglas and Paul Green, because you both have set up in the midst of the crisis, and your companies are still in the growth path. I think the biggest advantage from this is going to be your areas. So if Mr. Douglas could comment on this.
Good afternoon. I think in terms of ADPC, Khalifa Port and Kizad were two pieces of critical national infrastructure that were successfully delivered during 2012. And I think the point's well made. Economically, at one of the most difficult times that most of us can probably recall. It's fascinating because if I take the two separate businesses one by one, in regard to our ports business, Mina Zayed, which many of you will be familiar with, during 2012 hit its capacity. And to give you a sense of the difference in scale, 100% capacity on containers at Mina Zayed is equivalent to 16%, 1/6, the capacity of the new Khalifa port. And in doing that, because we hit capacity, we obviously were constrained in terms of our ability to grow. So 2012, we grew about 4% on container numbers. Interestingly, the year before, we grew 45%, which interesting reference there, but our target for this year is to grow by 30%. And if one goes into the next level of detail, where does the 30% container growth come from in a market that probably globally grows or regionally grows between 4 and 6%? It's because how much business we've leaked as a result of not having adequate infrastructure in place to properly service the growth and the energy that's more broadly within the Emirate of Abu Dhabi. The second part of it is our industrial zone business, Kizad. It's 417 square kilometres of landmass, so I think that demonstrates yet again the scale of the nation's ambition to diversify its economy and put proper enablers in place in order to do that. Zone A of Kizad, which for those of you who travel between here and Dubai, you'll probably know is pretty much on the halfway line. If you go in from here to Dubai, it's on the left-hand side, it's 51 square kilometres. And of that, we've got a net 28 square kilometres of land for industrial facilities to let. And up to now, we've got interest on over 60% of it. So we've, in some ways, surprised ourselves in what's clearly quite a difficult market. So industrial growth in KEZAD, it's linked to the port. Obviously, what is likely to come in terms of raw materials and feedstocks is likely to come in through the port. For those industrial tenants who are likely to be exporters, logically, therefore, they would then export through Halifa Port. So the two offers serve one another. So this year, 30% increase target on growth at the port, and we're looking to convert the equivalent of 8 more square kilometres of tenanted space in KEZAD. And I guess the punchline to this particular point is, notwithstanding the fact that the market and the economic background are clearly very difficult, there is always a search for value. There's always a search for quality. And unmistakably, I think many of the things that the wisdom of the leadership of Abu Dhabi's put in place is that investment to allow quality and value to be attracted here. And up to now, I think we've seen hard evidence of that.
Mr. Paul? I'd agree a lot there with Tony in terms of viewing projects like ours as key enablers. We've seen a lot of growth. I've lived in this country now 9, 12 years. In that time, we've gone through very rapid growth, obviously the slowdown, in some scenarios, contraction. We've been through a period where logistical solutions have been desperately required. The vision has been there to put infrastructure projects like ours in place to meet the current growth momentum, the growth trends. They're key on that. But furthermore, when we talk to a lot of different industries, we do a lot of research ourselves and through consultants, we see there being a very real aspect of the catalyst for growth coming from projects such as ours, and very much with Tony's as well, that they're needed as an enabler to meet the growth that is in the pipeline, that we have the momentum for today. But they also are going to drive further growth, incremental growth beyond that as well. And I think over the coming years, and one shouldn't look year to year necessarily, but you look over, these projects are for 10, 20, 30 years out. You'll look back on these in the future and see them, as a number of infrastructure projects have in the past in the UAE, been as critical at that stage in the evolution of the country and the diversification that is required for the economy here.
Taking the sustainable hat off and putting the investor hat on, do we as parents feel that the UAE is missing out on the opportunities available to us in the market? We've heard President Sarkozy today mention that this is the best time to buy when nations are down or businesses are out and in need of money or crisis, and you enter at the right point and sell at the right point. Are we in the UAE taking advantage of this, or are we following the right cautious path given the uncertainties in the marketplace? And Mr. Carl, you're in the investment side. I think a major part of your business is into the investment side and acquiring an M&A. Can you comment on this?
I mean, we've certainly been active in growing our business and trying hard not to swell our balance sheet in order to do it. So we've also been divesting non-core elements of our business. As I said, we're making 2 significant new country entries, capitalizing on opportunities that exist, probably uniquely for us in the north of Iraq and in Turkey. And we've been supported by our fixed income investors and our banks in order to do that. We've had very successful financings during last year, made our debut Sukuk issue, 2 major bond issues, and refinanced our corporate revolvers. So our finance community has been there to support investments both here in Abu Dhabi and in our businesses around the world. And so we've been keen to grow around our existing footprint and also to capitalize on opportunities here in Middle East, North Africa. We've got a big project under construction in Morocco that's been entirely financed internationally. So over 80% of the capital for that project will be borrowed, significantly in the Moroccan market, but also in the international bank market. And we got a project financing away, which we closed this quarter at rates, for 20-year money below the rate at which the Moroccan sovereign could borrow. So certainly there's strong appetite for our credit and for our investment story. So we're keen to capitalise on the opportunities that brings.
Perfect. Mr. Abdullah, the same question is for you. We have not seen a lot of PE deals going out in the market or M&A, especially on the private sector side. There's few tickets here and there that we've seen as bankers. Why do you think, is it that because of liquidity issues? Is the family offices, private offices are more cautious? Are they taking the right opportunities in the marketplace?
Well, I think for many reasons, the IPO market was completely crashed after the crisis, and the opportunity, there are some opportunity, but in a very small scale. Large scale, we have not seen any IPO, and I think one reason for that is not really the liquidity is already in the market, and family offices are very active. I think one of the main reason is the valuation. I think any IPO now will have to come to very low valuation, and that's why we see the reluctance in the market to introduce IPOs. And I think it's the role of the government here now. They hold a lot of companies that is not a core of business for the government. And I think the government can introduce those companies to the market to stimulate the market and to encourage others to come to the market.
Very interesting point and a valid point. I think one of the main issues today in the global crisis is access to funding. It's been a challenge, mainly on the global bank side, as well as the region. Again, another topic that needs to be stressed, and I think we have the two specialists in raising the funds, TAQA, with 13 bond issues today, massively oversubscribed TAQA in 2012, ranging from medium and long-term debt. Would you advise business with similar shareholding as yourselves, who have not or still dependent on the bilateral loan or syndicated loan market, to go to the route of the bond market, the DCM? And then what are the challenges, quick wins, and added value for such route?
I mean, we've spent a lot of time cultivating our fixed income community, and our credit story is well understood, and so our bond yields have fallen. We've narrowed our spreads against the sovereign, by over 100 basis points in the last 2 years. So we're borrowing now as cheaply as we ever have. So 10-year money at less than 3.5%, 5-year money at less than 2.5%. So that's an incredible advantage. At the same time, because reference rates are very low, and we've got strong support from our banking community, our bank lines are very, very well priced. We will be moving, I think. Our projects have very long economic useful lives, and so they suit the long tenor fixed income instruments. And so we'll be moving this year to refinance some of our bank project debt in our domestic projects here with project bonds, and bringing project bonds here to Abu Dhabi. And I think there'll be strong institutional appetite for that, because I think there's a search for yield, and I think those long tenors are very attractive to the pension community, the insurance companies, and so on. So I think that's an opportunity to exploit. And I think we've as I say, there is thirst for yield, and there is high liquidity. If you look at the complexion of our investor base, when we first came to the capital markets 3 or 4 years ago, most of our real money fund investors were in the US or in Europe. Now we're seeing much bigger take-up in Asia and much bigger take-up here in the Gulf. So now around 35% of our fixed income investor community is either here in the GCC or in Asia, and that's a change. And great enthusiasm, heavy oversubscription, good understanding of the company's story. We go on the road both on with deals and on non-deal roadshows, and we can get an order from every account. So the story is well understood, and the model of the privatization model that began the company has been a tremendous success, well understood by the lending community, both banks and investors, and it's become a benchmark internationally.
Mr. Abdullah, on the private corporate side, during the crisis, we heard that banks are no longer going to speculate on lending to real estate projects, no name lending, and going to be closer to their clients and understanding their value add, and that's where the old school banking comes back into play. Is that true, that this happened? Is the bank pricing methodology to basically differentiate between or cherry pick the right names to the wrong names is apparent in the market, or banks are still hesitant across the board lending to corporates or the private sector?
We noticed after the crisis that the banks are discriminating to a large extent between the good corporate and high-risk corporate. And there was no name lending. It's really that balance sheet that speaks for the and what matters for the bank. And we've seen some of those companies, as I said earlier, that with a strong balance sheet and cash-rich balance sheet have no issue with the banks. And banks continue to lend and have high appetite. Especially what we noticed also after the crisis, that most of the monetary authority interfere in the market by injecting a huge amount of cash to the local banks. And the bank, because of this, it allows them to recapitalize and improve their ratios. So they were in a very comfortable position, but they were discriminating and choosing the best in the market.
Mr. Cooper, sir, how do you see the future of development in loan versus bonds? Do you think the bond market is the future of this nation and the region, taking over the loan market, or are you still going to stay in the historic days of the bilateral loans given the current liquidity in the market?
I think it's a very similar future to that Carl just described. The debt market, the bank debt market is going to continue to be very important. I think the UAE banks have got something like $100 billion of exposure to the infrastructure sector, to the government-related infrastructure sector. That's clearly going to continue to be important. But as tenors increase, as project tenors increase, then the impact of Basel III, combined with the attractive pricing that quality credit such as the people on this panel can achieve, means that the bond market is going to continue to develop, and you're going to see that extend longer and longer and become tighter and tighter priced. So I think you're going to see a blend of financing options, which I think is good. I mean, I think that what people tend to forget as well is that the more we can develop a bond market here, that starts to feed into pension funds, starts to feed into a domestic pension market. So it has a benefit for the retail client as well.
Another question mark in the market here, banks being still cautious. When do you see the banks returning financing the real estate sector, specifically also foreign banks, were also a major part of the dynamics of the market in 2006, 2007. And the same goes to the SME business that we've seen the international banks have fully retracted.
I think you asked several different questions for the several different sectors. I think the comment was made earlier that there's no shortage of credit for quality names. I think that applies for retail, for SME, and for corporates. One of the things I was taught when I started out in banking was that you lend money with a view to getting it back. So lending to somebody who has the capability to pay you back is quite important. I think that's quite an important principle. You're going to see more balanced demand and supply coming out of the developers, which I think will continue to sort of reinforce the growth of the real estate sector. I mean, if you look at figures into 2012, I think you're already starting to see real estate lending coming back. I think real estate lending grew about 24% during the first 3 quarters of last year. So I think for quality borrowers with a sensible loan-to-value ratio, etc., there is already appetite to lend to the real estate sector. If you look at SMEs, again, I think there is appetite to lend to SMEs. We closed our third SME fund with Sheikh Al-Lubna 2 days ago, looking at how we can stimulate SME growth, particularly SMEs who are international in nature, looking to trade beyond the UAE. So I think the appetite is there to lend, but it's for quality. It's not name lending, and not name lending is a good thing.
And I think in the real estate sector, we've seen the government much more involved, especially in infrastructure or projects that are still on the map, that they protect also the investor side to not invest if the property is not ready. So we've seen also a lot of directions coming everywhere to help. I think it's something that we're going to be in track soon. I think it's time now to move to the more focused session on your entities itself. I'd like to start by Paul Green. I don't want to mention we have a boxing match between me and you right now, but I got a few questions.
You just lent him money, he's not going to box you around.
All of us did, right?
You're safe.
But I think with the vision of 2030, which is basically ensuring that the Abu Dhabi GDP contribution is, non-oil contribution is up to 60%. Etihad Rail plays a very dynamic and important role in the vision, not only in the Abu Dhabi vision, but also in the federal level and also the GCC level, where you are going to start spreading the network across, specifically in the logistic side. My question is, my first question is, what is the timeline on those projects? My second question is Etihad Rail considering project financing those, or we're going to depend on the local banks here to lend? Is any DCM or privatization plans coming into the perspective?
Okay, the timing is, you know, it's again in the press today, it's very immediate. This is not to be considered some virtual project that is still on the drawing board. We'll be operational this year with our first stage, and that is very, very real. So there's a key emphasis in the business on delivering that and addressing the operational requirements. In terms of a comprehensive network, we're looking to 2017. Again, very, very fast. And if one, again, it's testament to how quickly things can be done in this country. Regarding financing, the first stage, I can thank two members of this panel, including yourselves, for supporting us on this. We've closed a club deal just recently. Huge oversubscription, huge appetite for it. I'm sure we could have squeezed a bit more pricing out of it, but the pricing is
not much.
the pricing has been keen. It's been testament to what we've been talking about so far today. The right sort of risk, the right sort of class assets and support, have plenty of liquidity for them. And we look at, that's been in the bank market. We look towards the much larger project, the rest of the project, which in the order of magnitude of 40 billion dirhams in total. Now, aside from the fact that we expect to come under that because we're in a very competitive marketplace today, there is a decision pending from the shareholders as to whether how they fund this one in terms of whether there's debt or not. In line with any public infrastructure project around the world. If it is to be debt funded, it will clearly need a level of support, clear level of support in the short term, whilst we face a risk profile that doesn't allow us to go to markets on a non-recourse basis. That's quite clear. Whether you're talking delivery risk, revenue risks, regulatory risk, piece of policy risk in there. That risk profile changes very, very quickly. So in the sort of medium term, you transition into a zone where you could restructure it in a different way. At that initial period, if debt were to be the preferred solution, again, as we've been talking, for the right type of products, the right asset class there, the right support, there is a significant amount of liquidity out there. The order of magnitude that we're looking at would require a range of solutions. Debt capital markets would provide a core, both conventional and Islamic. But equally, bank debt has its role to play within that. ECAs have their role to play with it. There's a whole myriad of solutions that one would want to engage in to ensure that one's managing risk from the perspective of liquidity pools that are available. and then look, as the risk profile changes over time, to revisit that and look to structures that are more suitable, and then engage in longer term tenors.
I think that we are getting to my final question, which is basically the first deal, the club deal, was heavily supported by ADNOC, while the next upcoming projects are mainly logistical projects. Do you think the investors or the bankers would be as comfortable entering those projects vis-a-vis the line that ADNOC or support ADNOC of visibility that ADNOC is providing to your project?
Absolutely. We're very fortunate. We are one of those key strategic projects that has the support of the leadership of the country. It is a key infrastructure project to fit with the 2030 vision and strategy, as you say. As I said, the risk profile that we present at the moment does make this sort of project that parking that first stage, the ADNOC stage, that cannot stand alone. We're very conservative about our numbers. We don't look to overpromise. We have a project that has very strong economic returns associated with it. It has positive financial returns, but not such that we could take it and bank it and take it to lenders and persuade them and go through due diligence. That would not be appropriate. The markets wouldn't accept that, nor would we look for them to. But it is accepted from our shareholders that if to go the debt route, we would need clarity of support to stand behind that. If we have that, then the appetite is very, very strong. Particularly, as I say, if you structure this so it's a multiple phase structures that allows one to revisit in a number of years' time when the risk profile has changed and the exit is really very, very clear to everybody involved, and then you bring in a range of different solutions.
Thank you, sir. My next question is to Mr. Tony. It's a very interesting mix we have between Taqa and your business, which is basically Taqa on one hand going out, investing in entities, getting the best price from outside. We get Mubadala on the other hand, which is incubation, JVs. Then we have your model, which quite substantially different than their model, which is basically, especially through KZAD, you're bringing people or the internationals to set up here. Can you elaborate us or enlighten us what is the logic behind this, and why is ADPC not following the existing GRE models?
Okay, I think it goes back to vision for 2030. I think probably as everybody in the auditorium is aware, it's looking for a seismic shift of balance between oil and gas generated GDP and non-oil and gas generated GDP. So the target for 2030 is to have over 60% that's non-oil and gas, and with an approximate 4 times multiple from 2 years ago, so over $400 billion GDP. And we're directly linked to that. So, of course, the first question is there's a big, bold target in there. How do you enable it? And one of the many enablers to get industrial diversification is a industrial zone. And as I mentioned before, at 417 square kilometres, that's 2/3 the size of Singapore. And granted, it clearly isn't a very large country, but nonetheless, I think it gives you an idea of the scale of the ambition of the industrial zone of KZAD. But it's directly linked. So KZAD was targeted to enable up to 15% of the non-oil and gas GDP. So that's the equivalent of $41 billion worth of GDP generation through enablement by 2030. We studied internationally industrial zones, and by way of trying to simplify all of the many competitive factors into 3 headings, we believe that the competitive factors you have to have in place, not surprisingly, is low operating costs, equally not surprisingly, access to global markets, and creating an environment where it's easy to do business. So we've tried to develop a proposition that offers all of those enablers, and KZAD, therefore, is very much an inward investment and an internal investment target for industrialists who specialise particularly in steel, aluminium, glass, pharmaceuticals, food products, heavy engineering products and logistics. And we've had interesting developments in all of those sectors at this stage. And I think maybe bridging the question into some of the comments that have already been made, understandably, we're 100% government owned. And the liquidity that everybody's discussed that's in the market is something that we've been able to benefit from as well. And you know, the support of the community within Abu Dhabi, I believe, you know, both the financial community and the government entities such as our own have allowed, I think, a very, very competitive way to be formulated in the way in which big infrastructure projects are delivered in a very efficient fashion. The question, however, I think, is as we end up with lots of interested parties who are each seeking to fund their own, you know, mid-tier, you know, aluminium extruder, you know, the mid-tier steel fabricator, the upstream glass producer, who may be a blend of both internal and international investors, how they have the same competitive access to funding. And I think one of the things, of course, it goes almost without saying, is I can't imagine a conversation like this panel's been having in many other places around the world at this point in time with the same degree of joined-up optimism. And the challenge, therefore, is how one can capture that joined-up optimism and translate it into a piece of industrial diversification enablement, which is linked to 2030. And maybe that's a reoccurring question that we ought to test in sessions like this in the future. And I'd probably conclude by, again, echoing what other people have already said. I think, you know, ultimately, in terms of access to funding, there isn't a one-size-that-fits-all. I think the blend that people have discussed is both a healthy and a competitive environment to occupy, but quality wins all day long. And what we're talking about here, it's no fluff. These are long-term physical assets that are backed by the government. And in that regard, I think it underlines the reason why, A, it's so exciting for all of us, and B, why we must make full opportunity of it now, while other areas are suffering with different economic challenges.
Just going to take us back to Mr. Abdullah's suggestion, which is valid, which is why do Abu Dhabi GREs in some of their businesses don't privatize? So from that, I'll link that question that was next to your business, Mr. Carl, which is basically, are you planning to deleverage, not necessarily sell and buy new assets or balance them out, but from a private equity or IPO privatization perspective? It's basically spinning off some of the assets you have in the market here.
I mean, one of our goals as an enterprise is to achieve a standalone investment grade rating. So for TACA to be rated investment grade independently of the government support. At the moment, we have a single A rating, you know, combined rating, and we're probably a couple of notches below a standalone investment grade rating. So one of our key objectives is to achieve that standalone investment grade rating, so that the government support is then optional. It's there to facilitate access to capital markets and to improve pricing, but it's not essential to give us access to capital markets. We're pretty close to that, but one of the things we will have to do is get our debt to overall capital ratio down to below 70%, which is, yes, we'll do during our current plan period. But our business is a mixture. And so if you look at the Abu Dhabi business, so the power and water generation here, that privatization program is a huge success story. So, our 8 plants now in Abu Dhabi generate, almost all the power and water used in Abu Dhabi, and certainly a lot of the water used in the Northern Emirates, power too. Those plants, one of the most modern fleets in the world, second largest desalination business in the world, were built under a privatization program that the international community had complete faith in. And so 88% of the capital that built that fleet came from outside the region, from banks and from external investors. Now that's because there was an overall framework that was robust, that allocated risks in a sensible way, and that enabled that capital to be attracted. And so That's a business clearly where you can sustain a very high degree of leverage because the operating dynamics are very predictable. And that we will stay. But the other thing we'll stay with that. The thing to remember about that is that those projects are financed on a limited recourse basis. They're not recourse to the government, and they're not recourse to TACA. They're recourse only to each project itself. But because the operating dynamics are robust and the contractual framework surrounding the projects is believed in, you can leverage them in that way. And that's a very powerful tool and a great example of, of how to build modern infrastructure and be able to attract external capital with which to do it.
Well put, sir. Mr. Abdullah, we've heard a couple of public announcements, and I know you've raised this subject, family IPOing or businesses IPOing. Do you think, and you did mention the valuation is not the right time for them to issue, but what other challenges from the dynamics of the market here that you foresee if any of those family offices decide to go this year or next year?
Well, I don't really expect the IPO to come back again unless an intervention from the government, because we are just not ready, and we are still in the middle of crisis, and there is no certainty when we will cross the line. I think, in 2 to 3 years, I don't really see that the crisis will be over. I think we are living on the middle of it. But that's why I suggest that the government should give a bigger role for the private sector to play. I think some of the sectors that are not core sector for the government, it should get out of it and be a regulator more than provider. And I think there is a success story here. We can look at it when they decided to exit the healthcare. Now we have one of the best healthcare system, I think, in the region, because the government decided to hand it over to the private sector. And I think the next sector should be the education, for example. Government failed to bring quality education to the country, while the private sector provided all along a good quality education. And there is no reason for the government to run this. I think they can use, like some of the Nordic countries, where they provide education voucher for the students who can go and choose. They can go to the public school or to the... they also, I think there is more role for the women. I think the government should... We have 70% of our graduates are women, while the workforce, we have 27%. I think we should aim to bring it to 50-50. And I think that will strengthen our economy, and I think it will make it much easier to achieve our targets for 2030. I think those are very important, and I think that they are part of the reform that the government should counter the environment that we live in now after the crisis.
My final question to conclude the session for Mr. Simon Cooper. We've seen a big withdrawal from the international banks globally in terms of retracting to encourage your balance sheet and they're selling out their assets. We've seen a lot of the international banks decreasing their staff numbers in the Middle East. Do you see this force going further, or do you see more international banks setting up here and opening up their operations?
I think you've just heard best part of an hour's discussion on the optimism that is the UAE and the reality of that optimism in terms of the projects that are taking place, in terms of its position in trade, in terms of the growth of the capital markets, in terms of the quality of the businesses that are here. To my perspective, any sensible bank would want to be investing in being part of that growth story. And if people leave, that, I'm delighted to say, gives opportunities for you and it gives opportunities for me.
C'est la vie. Perfect. I think the organizers want us out. Do we have 5 more minutes for Q&A? We don't have 5 minutes for Q&A, so I'm sorry, and with this we conclude. Thank you very much, gentlemen. It's a pleasure.
Thanks, Simon. Gentlemen, thank you very much indeed. I hope you guys enjoyed that discussion as much as I did. For those of you that were here last year, I think you know what a treat you're in for now. We're really going to turn up the tempo a little bit. We're going to get some energy in the room. My next guest is David McWilliams. He's an economist, he's an author, he's a broadcaster, and I have to say, he's quite a comedian. So as a bit of an intro, we're going to show a video of his, and then please welcome David McWilliams.
Run, ever, run, ever, run, run, run. Run for your life, the boy carries a gun. It went tick, tick, boom. It went tick, tick, boom. It went tick, tick, boom. It went tick, 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 boom. Run for your life, the boy carries a gun. Run, ever, run, ever, run, run, run. Run for your life, the boy carries a gun.
In the past few days, I have received all sorts of economic forecasts from some of the very economists who didn't see this crisis coming in the first place. Of all the characters we should fear in 2013, the overconfident economic forecaster must surely be one of them. The Queen of England was first to spill the beans when she asked, "Why didn't you guys predict the crash?"
Oh, well, you know.
And if you didn't see this calamity coming, why should I bother listening to you now? And maybe the reason we economists can't predict the future is we don't really understand the present. Traditional economics starts with the basic notion that people are rational and see the world in a rational, cold, logical way, the way economists do. But this, of course, is complete and utter nonsense. In reality, humans are completely irrational. We are driven by emotions, by exuberances, impulses, and frenzies. We fall in love, we gamble, we even support useless football teams. But these irrational, illogical, and beautifully human urges dominate our decision making. Like, we generally don't learn from our mistakes. We always think next time it's going to be different. And when we're faced with enormous statistical evidence, we tend to ignore it. The National Lottery, with its "It Could Be You" slogan, trades on this. But you know, the interesting thing is it's not the average Joe on the street that makes these mistakes. It seems that professional gamblers, people who look at the form all the time, they also are driven by wild emotions. Now, to get a handle on just how extreme this behaviour is, I decided to go to the fastest growing bookies in Ireland, Paddy Power's, a place where young mathematicians are constantly looking at data from horse racing meetings and from football scores, trying to assess risk and price risk. And you know what? The good people at Paddy Power's proved to me that we are incredibly irrational. Not rational, but irrational.
Get your bets down, ladies and gentlemen.
The hard data from the bookies tell us that even when the chances of two horses winning are the same, Irish punters will bet 21% more on the Irish horse than the English horse. And in online gambling, we will bet 24% more on an Irish horse than a foreign horse, even though the chances of both horses winning are exactly the same. So think about it. If the professionals are driven by irrationality and emotion, what chance is there for the rest of us? But this lack of logic explains why the economy works as it does. When things are going brilliantly, we all get far too exuberant and we feel that the party will never stop. And then, when things are going badly, we all become far too pessimistic and we feel that the crisis will never end. And in the real world, it's those people who go against the herd that actually make money. In recent years, investors who made money were those who were actually selling when everybody else was buying, and those who were buying when everybody else was selling. But these lads and lassies, they are the exception. The norm is the rest of us. So at the end of the day, the economists have got it all wrong. The vast majority of us are totally irrational, and it's only a small minority who are actually rational. Now, this dilemma at the heart of modern economics was best summed up by J.P. Morgan, the legendary American banker, when he said of booms and busts that nothing so undermines your financial judgment as the sight of your neighbour getting rich. Now, all this implies that much of the economics that we teach in university has got absolutely nothing to do with real human behaviour. So this is the big challenge for economics, because if we don't actually understand what makes the average person tick, then how in God's name can we forecast how he's going to behave? So the next time you hear an economist on the radio or the television telling you exactly what's going to happen next year, you should be warned that this person believes that everybody is rational, when we know that we humans are beautifully and gloriously irrational.
Good morning, or good afternoon. That's actually what happens to you when you live in a country in austerity, where people have nothing better to do than write cartoons about the way the economy works, because we are adept at knowing how the economy works because we've been suffering under a broadly ridiculous and broadly unnecessary recession over the last while. The reason I wanted to kick off a wee bit with cartoons was the sense that people are irrational. And consequently, if this downturn, depression, recession, whatever you want to call it in Europe, goes on, irrational rather than rational behavior may well become the norm. And the other reason I wanted to use cartoons is to explain that, at least in my world, the economics world, the single most interesting disruptive technology that is out there is YouTube. And anyone who believes that they can keep ideas from the people via exclusive briefings et al. Is codding themselves. Those cartoons get up over 500,000, nearly 500,000 hits on YouTube. They cost us 500 or 600 euros to make. And all they are is a different platform telling different stories to different people. And the power of that, at a time when national and international politicians are floundering, is something that certainly people in the Arab world know all about, and I believe people in Europe will begin to know all about. But we'll start with Europe, because you do know that Europe is in a very queer position. And I'll try and keep my colloquial Irish accent. This is the best, poshest English accent I have. This is years of my mother's elocution. This was paid for by the sweat and toil of my alphala to try and sound vaguely like the Queen of England. It will begin to lapse in about 4 or 5 minutes and go into its own patois, but please stay with me. So you do know that Europe is a very bizarre place when the Pope is a German and the head of the central bank is an Italian. And not only that, the Pope has gone done something really un-Catholic, like resigning on principle. I'm a Catholic. I don't know any Catholic's ever done that in his life. And of course, the Italian is doing what Italians do. He's printing money because he's Italian. And he's trying to turn the euro into the lira behind the backs of the Germans. But his problem is Mr. Bernanke is trying to turn the dollar into the peso. And of course, in Japan, they're doing something very odd. I presume they'll be using milk bottle tops for currency in a few weeks in Japan. The amount of things they're printing there. So you have all this carry-on going on, but really, really what has happened, Mr. Sarkozy spoke of the French-German
alliance at the center of Europe. And I hope he's right. I hope he's right. Well, I don't actually, but that's a different thing. But look, what happened was, the single biggest myth that we have now is the sense that Germany is strong. Germany is not strong. Germany is weak. The German plan was that within the euro, when we all adopted the euro, that we'd all turn into little Germans. That was the plan. And I'd like to quote the great American economist now, Mike Tyson, when he said, "Everybody has a plan until they get a punch in the face." And the German punch in the face was not only did the Greeks and the Irish, the Italians, the Spanish, the Portuguese not turn into Germans, but we became more flamboyantly Greek, more outrageously Italian, more free-spendingly Irish, and more fashionably Portuguese. And the worst thing for the poor old Germans is we did it all with their money. So Sinead, as they say os Gaeilge, that's where we stand. That's actually what happened. There's no miracle. The Germans simply lent us money. It's funny, I've just flown in from Vegas, and it reminded me, the poor old Germans, it must be like a scene from that movie, The Hangover, where they join the euro and they go out in the lash with all sorts of unsavory people, and they end up in bed with people like me. And they wake up and thinking, sweet lamb of divine, what have we done? And then there's the Italians doing unnatural acts at the end of the bed. And, oh, shocking, shocking. So, what you have is Germany is weak, ladies and gentlemen. Not strong, but weak. Not only is it weak, but the 28th of June last might be a date in the calendar if you were a football fan like me. An overconfident Italian soccer team, sorry, an overconfident German soccer team took the pitch against a bunch of Italians, and Pirlo and Balotelli did a job on them. And they were beaten 2-0 against all expectations. The very same night, an overconfident Mrs. Merkel went into a European Council meeting only to be mugged by the Italians Draghi, Monti, and others. It was like one of those Gangs of New York movies. You know, I've always fancied De Niro playing Draghi myself. And Joe Pesci playing, and no, anyway. Point is, you can guess the Joe Pesci, but I could think it looks quite good actually. Right. The Germans were forced to accept that they will have to mutualize the debt of all the delinquents that they happen to end up in bed with. Because what happened to Germans is something very, very unpleasant for them. They believed something was going to happen, and it didn't. It's like the Germans bought a new house in an estate. I bought a new house in an estate about 8 years ago. And for the first couple of years, everyone's really proud in the estate. And all the houses look all swanky. And all the lawns are all cut. And all the grass is lovely. And there's little hedges. And there's a new lick of paint every year odd. So the Germans bought the newest Euro estate and they moved in. And they had a lovely big Passat, a lovely Volkswagen Passat outside, because they didn't want to look too flashy. No BMWs or Mercs for the Krauts. That's only for Italians and Irish, the people who can't afford the cars in the first place, right? Who actually borrow German money to buy German cars, which is actually the truth, okay? And then one day the Germans wake up and the Greeks have gone AWOL. They look up at the Greek house halfway up the estate and the curtains haven't been opened in a week. And then they look across the road and the Spanish hedge is all over the kip. And they look down and the Irish are sitting in the front drinking pints. But at least they could always depend on the French, couldn't they? Because after all, Mr. Sarkozy said it's a relationship fort entre les deux, hein? Okay? And then one morning, the Germans open up their fancy windows and they look across at the French house, and to their shock and horror, there is a Renault Espace up on blocks looking at them. So that is what has happened to Germany. That's why it's weak. And Mr. Draghi understands this, and he has started a process of printing the euros under what is called the LTRO, which, and the other one, the outright monetary transactions, which simply is a large cash for trash scheme, which is kind of a funny one actually, because it's actually a great example of Mr. Draghi gives bust banks money for half nothing, and they lend that to bust governments, and they call it a success. It's a big figure. It's €1 trillion thus far this year. Just to get your head around €1 trillion, if you were to spend €1 million a day, it would take you 2,743 years to spend the trillion. So that's the amount of money going in. That's the policy. That's the policy response. But the problem is, last year I was very lucky to be speaking here and meet Axel Weber, the former head of the Bundesbank. And when you meet someone like that, you tend to listen and not talk, and take notes and try to figure out what's going on in your man's head. And what struck me, what was going on in this man's head was we sat at dinner, and it was very interesting. And I hope he wouldn't have any problem with me saying this. It was like a Martian and someone from Venus meeting each other. Because at the end of the day, for a German central banker like Mr. Weber, money is a philosophical issue. It's a philosophical issue. At the end of the day, for a former Irish central banker like me and many other Europeans and, dare I say, Americans and British, it is also a philosophical issue, but it's a different philosophy. For us, money is a tool that you use to move the economy onto a different growth path. So if you have a recession, what you do is you use money in your toolbox as one of your tools to lever the economy onto a different growth path. That's our view. The German view, at least as I understood from Mr. Weber, is that money is not a tool, but it's something much more like a public good. And by that I mean it is something that needs to be protected, like the environment, like good air or clean rivers. A public good that should be protected by laws and legislation. And once you have signed those laws and those treaties, you do not break them. Now, this is clearly a function of Germany's history, not only in terms of hyperinflation, but in the fact that they were also ruined by a man who regarded treaties as nothing more than a wee bit of paper. So it's not a tool to be used and abused. It is a public good to be protected by law. But what is happening now is Mr. Draghi is using it as a tool. Monetary financing. The Irish just got monetary financing last week. We had a debt. Most of us didn't recognize it, but that's neither here nor there. We got a balloon payment. We start paying the thing in 2038. Right? Simple monetary financing. So the Germans are facing a philosophical and financial defeat, and they are looking it straight in the face. And this is at the core of the future European arguments that I can see coming down the road. It also explains why the narrative, when we were in school, the Jesuits always said to us, start the conversation, own the first paragraph, and you will win the argument. Anybody who suffered under the Jesuits will recognize these things. It's actually quite a good order. As Catholic order goes, they're actually a very good order, the Jesuits. You change the narrative to suit yourself. Now, the narrative has been changed in Europe, which is that, oh my good God, look at all the feckless Spanish and Italians. Jesus, aren't they terribly lazy? God, I wouldn't like to be going down to Spain. Sure, you could do nothing down there in Spain. That's the narrative. Cheerled by the Financial Times, it must be said. A newspaper that if you read and want to make money, you will lose. On every issue. Because the Brits are sitting there waiting for the whole thing to collapse. They've been waiting for a long, long time. They're still waiting. It's the Harry Redknapp approach to economics, I call it, but that's a different matter. Anyway, we move along. what is happening in Europe is nothing more than a simple Minsky and Kindleberger for economic students there cycle. The money comes in from Germany to Ireland, for example, or to Spain. And it goes through 3 phases initially, 5 in all. The money comes in, there's a change of policy, we join the euro. Interest rates fall, we go, happy days. Can we have all that money, Gunter? And Gunter says, yeah, sure you can, no problem. So we take all Gunter's money, because Gunter, as you know, is typically, the German likes to save. And they're old, and they work in places that generate lots of income. And like the Irish, having the arse in their trousers. And we're young. So suddenly you have Gunter who spends his money, well, they do actually sometimes spend their money, which is a shocking sight, which is the annual German nudist holiday in Dalmatia. If you've seen that horrible, frightened, shocking stuff, right? But apart from that, Gunter puts his money into Deutsche Bank. Deutsche Bank doesn't know what to do with it, lends the money to Bank of Ireland. Bank of Ireland said, don't worry, Paddy over here would like a Mercedes. Oh, thank you very much. So I buy the Mercedes that Gunter made in the first place with his money. That's the deal, right? And then, so it starts with that. Then the second phase is asset prices start to rise. In Italy, in Spain, in Greece. The third phase is our friends, the banks get involved. I speak as a former but recovering banker. What happens? The banks get involved. The balance sheet starts playing tricks on them. Oh my God, is that really worth that much? Oh yeah, oh then definitely I can lend. Can I lend much more against that? Oh, fantastic. Then we get into the euphoria phase. Everyone's euphoric. Everybody thinks they're George Soros. Like my mother, she said to me the other day, she's a school teacher from the very, very west part of Ireland. And during the top of the boom, she says to me, I think I'll go and buy myself an apartment. I said, why would you do that, Ma? She goes, well, you know, Mrs. McCarthy bought one a few months ago and sold it to Mrs. McCann for 100 grand profit. As J.P. Morgan says, nothing undermines your financial judgment as the sight of your neighbor getting rich. So we all get into euphoria. Fifth phase then, the top people in the market start to sell out. Prices begin to fall, and Bob's your uncle. Sixth phase, nice German expression, Torschlusspanik. When the shut door panic happens, everyone tries to get out and we're screwed. That's it, it's a simple Minsky cycle. Leverage upon leverage, that happened. That's what happened in Europe. And obviously to get out of it, you've got to deal with the debt, which was borrowed. Years ago, I worked for a fellow called Jack Welch. Some of you might know him in the room. Takes his work very seriously, that fella. And my job was to MC his European book tour. It was fine, actually. I'd never met him before. It was a really good experience. It ended up like a father-son relationship, myself and Welch, because we'd do the gigs and then people would leave the room and we'd chat away and maybe have a drink and have a natter and whatever. And I remember one night we were talking about crises and he said to me, David, in a crisis, all you have to do is 3 things to get out of the crisis. Number 1 is you've got to define reality. Not as you would like it to be, but as it actually is. Second thing you've got to do is once you've defined reality, do something about it. Don't just talk about it, do something about it. And the third thing is once you've defined reality, you've done something about it, you face into the problem, and you know what? It ain't half as bad as you expected it to be. The problem with Europe is we haven't defined reality. That what we had was a Minsky-Kindleberger cycle of cheap money being given to people who shouldn't get it. And instead we've said, oh, it was all to do with rotten governments. And we've kind of shifted it into an ideological thing, which is a real bore and is actually not true. There's nothing worse than being boring and untruthful. Okay? Being boring and truthful is a good one. Being truthful and not boring. But it's terrible to be boring and truthful. And then ideology, and then the Economist picks up it, and then the Financial Times, and boring. Wall Street Journal, you're into all sorts of shouting matches. I'm right, you're wrong, blah, blah, blah. What actually happened, we know, is that once there's overlending, a country goes into what's called a balance sheet recession, which is a particularly unpleasant form of the disease, because historically speaking, recessions have lasted on average since the Second World War 10 months. This one has not. Why is this? Because we went into recession with too much private and then public debt as we switched bank debt into sovereign debt. But too much debt. Now, what happens in too much debt is the punters, me, all of you dudes out there, okay? You have too much debt, so you begin to worry about the future, and you save. So the savings rate goes up. That's grand. As you save, the people in the shops out the main street say, oh my good God, they're not spending. What will we do? We'll cut prices to bring them in. Cut prices and people will come into the shops. But in a balance sheet recession, when you're worried about negative equity and your portfolio that's underwater, what happens when you see prices falling? Because you've just seen prices falling, you think, aha, prices are falling today. Do you know what? They're going to fall even more tomorrow. Or even more next month or more next year. And the very act of reducing prices in a balance sheet recession does not bring forward spending, it repels spending. It repels spending. When I was in the Jesuits and we were teaching economics, they said when the price of something goes down, the demand goes up. But not now. Now when the price goes down, the demand goes down. We get stuck in a vicious deflationary cycle, which is exactly what is happening in Europe at the moment. And the problem with deflation and spending is the basic idea of economics is your spending is my income because we buy and sell to each other. And my spending is your income. And if you're not spending, I've got no income. And if I've got no income, I can't spend. And worse still, if my debt, which was calculated against my income, remains the same, and my income falls, what happens to my debt to GDP? It actually rises, which is why Britain lost its AAA bleeding rating on Friday. Austerity doesn't cause debt to reduce. It causes debt to increase. Why? Because the rate of interest rate is positive, and if the economy goes to zero because of austerity, your debt gets bigger, not smaller. These are all basic things. You'd learn it in Irish schools at the age of 14. I'm sure you learn it in your schools too. I mean, this is not hard stuff, right? So, where are we? And the accent is remaining comprehensible, I hope. Good, good. That's all right. Okay. Now, so that's where we are. So we've been doing this austerity game for what, 5 years? And the thing's getting worse. Somebody very clever, I'm not too sure if it was Albert Einstein or Roy Keane, once said, the definition of stupidity is doing the same thing over and over again and expecting different results, and that is what we're doing. That is what we are doing. And still unemployment rises, and Mario Monti worries about why he gets 10% in the polls because the punters don't like that, Mario. The fact that you were actually superimposed and Berlusconi was deposed in a rather undemocratic move, which we all seem to have forgotten, like I'm all for bunga bunga parties, okay? I just want to be invited to one. I'm all against them when I'm not going to them. Oh, it's terrible. Can't believe a man of his age. Anyway, the day I get invited to one, I'll change. But you know what I mean? Going to bunga bunga parties does not qualify for being deposed by the European Union, which is what actually happened. And the same thing happened to the other geezer. What was his name? Papandreou. Now, the people have spoken, and it's a terrible shame because the elite can't get their head around it. They said, you know what? We'll have a clown instead of a pornographer. Which is okay by me. Which is okay by me. All right? But that's what's happened. That's what's happened. And then, of course, we say, okay, what's the solution? The solution is, okay, we know that it's austerity, but we can't spend. Oh, God, we can't be doing that. Okay, I'll tell you what we'll do. We'll depend on central banks and investment banks to get us out of this. Oh, Jesus, that's a great idea. The very people who got us into the bleeding mess in the first place. Oh, God, that's what we would do. So wait, so we get the central bank, they'll print all the money, and they'll give it off to the investment banks who blew the money, and then that'll drive down bond yields, and then the Financial Times will say the crisis is over. Okay, I'll tell you a story about central banks and investment banks. I am a recovering central banker. I go once a week to a meeting of other recovering central bankers. We exchange stories. It's a day-by-day one. I'm also a recovering investment banker who is now delinquently draws cartoons for a living, right? But when I heard that we were depending on central banks and investment banks to get us out of this mess, I worried greatly. In fact, I had sleepless nights. My children thought there was something really wrong with me, but it was just nightmares and bad memories and things. But as long as I buy them Hollister head to toe, apparently I'm forgiven for everything. Or Abercrombie and Fitch. So you have little freckly Irish people pretending they're from California. Stupid, but there you go. We're that kind of the pink version of Californians. It's kind of without six-packs. Anyway, six-packs are what we drink in Ireland. Anyway. So, years ago, a very, very similar crisis in Europe, and this is why it's important. In 1992, I was working my first job in the Central Bank of Ireland. And of course, the British caused us yet more problems by being thrown out of the European exchange rate mechanism by the Germans. Do you remember that? Black Wednesday. And we kind of sat in the Central Bank and went, oh, holy God. So what happened? So the Brits' currency collapsed. And we said in Ireland, oh, we will not devalue. That would be a terrible thing to do, because we're not England. And of course, the Central Bank in Ireland then was run by half the IRA Army Council at that stage, right? Okay? And they didn't like the Brits at all. But it seemed to me like that anyway. And we couldn't do anything the Brits did. But I said, yeah, but what about the 24-mile tailback of people going shopping in Sainsbury's and Newry just over the border? Isn't that got something to do with it? I said, no, don't worry, we'll keep our currency and we'll defend it stoutly. I said, all right, whatever you say. And I was working as an economist in the International Relations Department because I'd gone and done a degree out foreign and could speak a few foreign languages. And that was my role. And the lads we were spending money. Our interest rates were going up and up and up and up and up. And then our interest rates went to 102% overnight to be credible. It's not very credible when your interest rates are 102. It actually means you've no money at all. And my boss came in and he said, David, would you please go over to London tomorrow? And would you go to the Dorchester Hotel and explain to a bunch of Swiss and German investors who own 11 billion punts worth of Irish government stock that we will not devalue? Okay. But we've no money. Doesn't matter. Go over and tell me we won't devalue. I said, okay. If anybody actually seen Father Ted, it was like sending Father Dougal over to the thing. And so I arrive over with my mantra of no devaluation, no devaluation. And I go into a room. The room is as big as this. Huge room. And inside in the room were 12 bankers. And when Irish people were poor, rich people actually smelt different to us. Like they looked totally different. They had big watches that you could call in airstrikes on, stuff like that. And I'd be looking at them thinking, what's going on here? And I said to them, and I had all my notes, I said, there'll be no devaluation of the Irish punt. Everything is absolutely certain. Your exposure at the long end of the curve is nothing to worry about. And all I could hear were fellas at the back getting on. Do you remember those big mobile phones that used to look like Doc Martens, big, huge things? And the fellow would have a big old brick stuck to his ear. And all I could hear him saying is, sell that country, anything. Sell its stocks, bonds, anything at all. Sell everything. And I thought, oh, God, my life is over. I'll never work again. And they all left. And they were polite because they were German and Swiss. And they're polite people, God bless them. And except one fella came down. And he started kind of coming down towards me. And I could just see that he was about to lose a fortune after we devalued, which we would. And he came down and he stood in front of me and I was kind of bracing myself. It comes from the Jesuits. You always brace yourself for being hit at some stage. And I was just bracing myself. Or else the Jesuits would get inside your head, which is even worse. And he said to me, very impressive. I said, oh, thank you very much. He said, your ability to explain difficult economic concepts with such alacrity is really quite fantastic. I said, oh, me, yeah, you too. You're a great guy as well. You head, whatever your name is. And he goes, your ability to explain technical things is interesting. And he said, your ability as somebody so young and with a smile on his face to lie for his country.
is phenomenal. Would you like to lie for me? Now, I was educated enough, but even though I was working in the central bank, I thought there was only two banks in the world, Bank of Ireland and AIB. And your man said to me, I am from UBS. And I thought the fella said UPS. So I imagine myself, after all me ma's expenses, in a brown post office uniform. Anyway, I ended up working at UBS for many years. Speculated against the currency that I was trying to defend, and it obviously did devalue, right? The point of the story is that central bankers always do stupid things, and investment bankers have very, very good HR policies, okay? And we are now being left in the clutches of the European Central Bank and the investment banks. And what are they doing? They're putting money into the banks because there's a massive liquidity trap because the people have too much debt and they don't want to borrow, and the banks have too much bad debt and they don't want to lend to the punters. They lend to the casino. They might as well lend to Caesar's palace. And then the casino takes a little yield play and borrows at 1%, making up money, and puts it onto the Italian yields at 6%, takes its margins at 5%, and everyone says the European crisis is over. And all the while, unemployment is rising. And all the while, the economy is contracting. Why? Because we are caught in this brace where those with money are terrified and are saving, and those without are deleveraging as quick as they can. And we're back to square one. And square one in Europe is what? Not enough growth, too much debt, and no political leadership. No political leadership. Wasn't Kissinger, I think, who said, when I want to talk to Europe, who do I call? That was a long time ago. Despite what Mr. Sarkozy says about the intimacy of their relationship, the Germans are as panicked about France as they are about Ireland, because they know that France isn't really only pretending to be strong. They know it's been running a current account deficit for how long. They know its welfare system's out of control. All that carry on. David Beckham or no David Beckham. We should have reminded them that Bayern Munich won the European Cup because they weren't allowed to borrow. They beat Chelsea, who existed because Abramovich took all the money from Russia. It's a different culture. So where do we end up? Well, we end up in a very strange place where, because there's too much debt and not enough growth and no leadership, you've got to do one of the two things. How do you get out of too much debt? Either you grow your way out of it, which you can't in a balance sheet recession, and if you buy yourself time, the interesting thing about deflation is when you buy yourself time, it gets worse, not better. Again, I love hearing fellas come to TV and they say, oh, we've bought ourselves 15 years. I say, yeah, but that's worse because we're deflating. If you're inflating, you buy yourself 15 years, you know what? Your debt materializes and it's gone. So, too much debt. Not enough growth. Too much debt. No leadership. What do? Normally with debt, you either grow out of it, you inflate out of it, or you talk your way out of it. And by talking your way out of it, I mean you negotiate with your creditors as a grown-up. It's called co-responsibility. The United States paved the way in the savings and loans crisis in the late 1980s, where you get the creditor in a room
And you throw away the key and you say, dude, the money is gone. And he goes, really? You say, really? But dude, do you know what I'm going to do? I'm going to allow you own the bank you just lent money to. Would you like some equity? Okay. And together we play the game of capitalism, where we both try and recover the asset. We could do it that way. But the French don't want to do it that way. So what do they say to the poor old Greeks? Do you know what, Mr. Greece? I know you have lots of debt, but what we'll do is we'll give you a facility to borrow even more. So we're going to add more debt to a balance sheet that's bust because of too much debt in the first place. And we're going to kick it out into the future. And we're going to impose deflation on you. Oh, okay. That's why Greece has defaulted 5 times in 18 months. What do you expect? What do you bloody well expect? Or else we could do about 2 years ago in Iceland, I remember the Irish government kept saying, oh God, Iceland, don't be going to Iceland. Iceland is a basket case. Jesus, if you went to Iceland, you wouldn't know what, you might turn into an Icelandic person or something. Even if you went up to Donegal and looked in the general direction of Iceland, and the wind turned, as your ma you'd say when you're young, God knows what would happen to you. So I remember going to Iceland, and I flew up to Iceland. It's a lovely flight, actually, all the way up over Scotland, over the Union, all the way to Iceland, to see what a basket case looked like. And after about 2 days of very, very intense economic analysis, talking to publicans and taxi drivers and barmen and loose women and all sorts, I concluded from my vantage point of the Hilton in Reykjavik that the only people who were really worried in Iceland were English bankers looking for their money back. The rest of Iceland had gone on with it. They defaulted and devalued and all the usual stuff. And I put this to the finance minister of Iceland, and he just looked at me quizzically and he said, yeah, but we have no money. It's all gone. We can give them fish if they like. Now here was a man who had defined his reality. The money was gone. The Atlantic was full of fish. I'd love to see those guys from Goldman Sachs going back to London with very swanky, upmarket sort of suitcases stuffed with El mackerel. Okay? And this really is where we've got to get to in Europe to get out of it. We've got to realize there will be large debt write-downs, not because we don't want to pay, but because we can't. And all the assets you thought were assets are worthless. And maybe my grandkids will see some value in some of them, or maybe not. And to do that, then we need to recapitalize our banks. And in order to recapitalize our banks, we have to find nice people in the Arab world to do that, because we've no money. This is why they're all here, guys. Look, I'm the dude who does the cartoons, okay? And joins up the dots, okay? So that's why they're here. You know this is the deal, right? Now, it may or may not work, but I'm just telling you what the deal is from where I'm standing, okay? Now, last word, and before we go, on politics. On politics. And on the politics of despair that characterizes a country when a country is in austerity. My father, our country screws up a lot in Ireland. My dad lost his job when I was a kid, and he used to put on a shirt and tie and pretend to go to work because he was so ashamed. And he used to drive off into the Dublin mountains and be on his own. And he was about the same age as me, mid-40s. When I was a kid, the same age as my boy. Unemployment destroys people. Don't make any mistake about it. It destroys their soul. It destroys them physically. It makes them unhealthy. It makes them psychologically very difficult to live with because they have been abandoned.
and they feel abandoned. We get that into our heads, because when we're hitting the swanky food and talking about bond yields don't vote. Bond yields are a conceptual idea for rich people. If you have a country or a society or a continent which has got 25 million people out of work, that is Europe. And every single one of those people has a family and has a story and has aspirations and dreams that we all have. And if they are ripped away from them, what happens? We have some systems that we have inherited over the years. One system is one man, one vote, democracy. Doesn't matter how rich you are, how poor you are, you can go in and you can actually be mandated. The other system is capitalism. One man, €1. Capitalists like to think the more euros I have, the more votes I do. And normally that is the way. Then the third system we have in Europe, I was watching Lincoln yesterday on the plane coming home. Obviously the Americans have the other weird one, which is the one man, one gun principle. But we don't have that. Thanks be to Jesus, right? The other one is one man, one flag. One man, one flag. I am Irish. You are British. You are French. You're Italian. That's your identity. That's who you feel yourself to be. When Ireland go play soccer against Poland, I don't wrap myself in the European flag with Wojciech. Say, hey, Wojciech, I've always wanted to be here at this level of proximity to you, my friend, my European friend. No, I go to the Irish end with the other paddies, right? So these three things are going on in Europe. One man, one vote. One man, €1. And one man, one flag. And these three factors are coming together now in this crisis. And we do not have the time. We do not have the time to disentangle them logically the way we used to have. And why is that? Because of the final piece of equipment, which is one man, one iPhone. Because this is a much more potent weapon in this crisis than you think. If you think about YouTube, think about what's happening to Arab kids on YouTube, okay? Think of what has happened to our kids, right? Nothing can be kept from them. Nothing. It is an amplifying vehicle which is screeching messages at them all the time. Look at the figures. Look at the figures for YouTube. 72 hours of footage is uploaded every minute onto YouTube. That's just YouTube, okay? 4 billion hours of YouTube is watched per month. 4 billion hours of it. 800 million daily users all over the world. 60% of all YouTube users are outside the United States. And 80% of all YouTube watchers are watching material sourced outside their own country. So what does this do? It profoundly accelerates the pace of social change and information in a way in which the elites, who a couple of years ago thought that they could manage the crisis, cannot. And that, ladies and gentlemen, is why we need a proper capitalist solution to a proper capitalist problem of some dude lending another dude too much money and looking for it all back in Europe. Once we figured out that that ain't going to happen, the political threats that are there will be manageable. But if we pretend that this is a story of lazy Greeks and Italians and hard-working Germans and Finns, we will enter a culture war, the likes of which we haven't seen in Europe for many generations. Thank you very much.
David, that was fantastic. Thank you very much, please. Ladies and gentlemen, I'm sure you agree that was absolutely fantastic. David will be with us for the rest of the day, so I'm sure a lot of you may want to ask him questions. Just before we break for lunch, a couple of points I'd like to highlight. First of all, just after the lunch, we have some investor presentations taking place. They're going to take place just outside the auditorium in one of the meeting rooms. It's going to be signposted. The kind of companies we have presenting today are MBAD, Mubadala, Vakif Bank. We have Aldar Suru telling their merger story. We have Islamic Development Bank. So please do go along to those sessions. It's going to be very informative. It will also be interactive. You'll have a chance to ask questions. In addition to that, if any of you would like to sign up for some of the entertainment that we've laid on for the afternoon, such as going on yachts around the Abu Dhabi Corniche, helicopter tours around Abu Dhabi, please do speak to the entertainment desk outside. Finally, I really hope all of you that are here today will be joining us for the Signature Gala dinner this evening, and we look forward to seeing you there. Guys, you've been a fantastic audience. Thank you very much.